Morning all, how are we doing? Look at that. I actually made it on time this morning. Must be a record. Finally. Morning ladder, morning Steve from sunny Spain, peeing down with rain England. Diamond, cloudy France. Morning Themba. Right. So, FOMC last night. Big one. Very interesting. Lots of strength on the US dollar. Continuation strength this morning on the US dollar. Well, I think there is. I'm short on pound US dollar on my funded account, which is coming down nicely. So I'm assuming that is US dollar. Yeah, it is. So yeah, good strength on the US dollar again so far this morning. Indices probably coming down. Yeah. Well, sort of. So yeah, big FOMC announcement yesterday. I caught the tail end of it yesterday. So I managed to, what did I shut? So I closed out US dollar CAD yesterday. I did 0.9% yesterday. Closed out US dollar CAD. There's a lovely little trade that just straight in, straight out. Well, over the next day anyway. I took that short. Remember yesterday I said on the pound US dollar, I was going to tee up a short position on the news, which I did. So the plan was yesterday, if you remember, I was expecting US dollar strength. So I said, what I want is a pending order under this low. And obviously just to get gathered into it when we get the strength on the US dollar, which we did. But obviously it went the other way. They did the typical, this is such textbook FOMC, really is. Straight up, take all the stops, run the other way. It's absolute textbook. So as soon as that happened, on my funded account, I had to go out at 10 past 6. We can look at it actually on the 5-minute chart. This is what I did yesterday. FOMC, bang. I watched it for 10 minutes. I said, right, I've got to go. I put a pending order under there. I put a TP down there. I should have left it. But I rode that down there and made just under $2,000 on that move. It's absolute textbook stop, hunt and run. So strength on the US dollar. So I had that sell limit, sell stop order underneath the lows. We had a little pullback off the low there and then we pushed back down. So I got in that one and got out down there towards the end of New York. So that was a nice little short, made about 0.5% roughly. US dollar CAD was nice. The only other trades I took yesterday were the DAXs, which I did in the live room anyway. So you saw all of those, I think. Yeah. So we had those shorts yesterday on the opening range breakout, 3 positions. I did another one on the break there, but then we started to push up, so I got out, which is happened to be perfectly timed. So yeah, that was all I did yesterday. Oh, and Aussie New Zealand, nasty little Aussie New Zealand. Oh, there's a couple of losers on. Oh yeah, we had the losers as well, didn't we, yesterday? Opening range breakout losers. Forgot about them. So took the initial opening range break, which stopped out. So I took an opening range break long, which stopped out. So I took an opening range break short, which worked out. So okay, that was the DAX. Aussie New Zealand. I had another aggressive position on that one yesterday as well. When we broke the highs, I got in long, looking for that start of that move, which didn't happen. We came back down, we pushed back up. I got the positions on again, and then we came back down. It's just, this thing is just, no, oh, hang on, that was the wrong one. Oh, no, it was the first, that one, sorry. It was this one. There. Yes, so I thought I'd taken another one after that push. So I took that one there and then got taken out of that one because we just didn't go anywhere. It's just not going anywhere at the moment. It's just grinding. Absolute. It's the worst, horribly grindy squeeze of the world. A horrible move this we got going on Aussie New Zealand at the moment. So what I did yesterday was I had these positions which I got into on the pushes. I added another one yesterday as we started to push up, and I added another one. I think that one was added this morning, I think. So yeah, I'm pretty loaded on this. I need a move to the upside today. If I don't get one to the up today, I'm going to have to start doing some DD control. And the problem I've got at the moment is I haven't got any exposure because I can't get into anything. Nothing. There's nothing lighting up. Not even 14 RSI in line with trend. I'm just not getting anything, any movement anywhere. So I'm struggling to find anything to get into at the minute, which isn't good. You've got no risk. You've got no way of making money. So I'm scalping the crap out of my funded account at the moment. And I passed another funded account yesterday. Oh, I posted it in the Telegram group. What a day yesterday. I basically yesterday obviously was crap, wasn't it? It didn't go anywhere yesterday. It's FOMC. You just no movement on anything. Nothing was moving. It was really hard to scalp anything decent. So I thought, oh, do you know what? If I try and trade this, I'm going to get killed. So I started a new evaluation for 100k. And I thought, let's go for it. So I went 1.5% risk on every trade. And I passed the first stage in 3 hours. Got the second stage about 45 minutes later. Passed the second stage in New York. So fastest way to get 100k in it. Done. One day. I'm trading 100k and I'm $2,000 up this morning. Actually, I made 1,500 out of the drop yesterday, last night, and I'm 425 up this morning on the pound US trade. So not bad, is it? 100k account yesterday and $2,000 profit this morning. I'll take that every day. Beats position trading at the moment because you can only position trade if stuff's moving. It's not moving at the minute. Anyway, morning, Jane. So this morning we've got Swiss franc CPI, which came out as negative. So let's have a quick Swissy. Hello, what's going on there? Oh, what's going on with these charts this morning? Well, I'm finding real lag with the Forex data feed at the minute. So we've had a bit of a push at the moment there. Euro Swiss. We had a bit of volatility. So yeah, not a lot on that. It's negative, which will be negative Swiss franc. So it's ever so slightly negative. It's a 0.1 instead of a 0.2. It was negative 0.2. So it's a miss, but it's not a big miss on the CPI. So that's good, obviously. Inflation not as big as they thought it was. They were expecting it to be a little bit bigger, weren't they? So this is going to be negative for the Swiss franc. Inflation brings the currency prices down. So we may see Euro gaining, Aussie gaining. Yeah, it's starting. It's not a big enough miss, I don't think, to make a massive impact today. So I've got 1 minute to the market open. Why is that showing 10:55? There we go. Right. So yeah, so that's the news from this morning. We've got Lagarde speaking in a minute, and then today is the big one, the Bank of England rates. So this is the key one today. As soon as this is out the way, we can start some real movement across the board, I think. We've been waiting all week for stuff to be released, and now we've got the Fed figure, and we'll be getting the pound figure. I still don't think we're going to get massive movement on the pound, to be honest, because obviously we're waiting till the 17th of November on that one because we need to see what the budget's going to be. But and then we've got PMI this afternoon as well. So it's a big old news day again today. So don't expect a massive move this morning until 12 o'clock. I think we're probably going to have a fairly lackluster open again. But we'll see. Market's just opened. Antoine, ADR signal. Nope, no ADRs this morning. Stefan, do you use COT data for your trading? Not anymore. I used to. The COT report is available on my site, but I haven't used it for a while because obviously it's not as reliable at the moment because at the minute the market hasn't updated September. Look, something on my feed. There you go. I haven't looked at it since September, but I haven't been using COT since we've started all this stuff with inflation rising because the long-term investment isn't being driven as much now, and the data from COT. The problem with COT data is it's a long-term view, and you can't have a long-term view. It's really, really good when you've got normal stable market conditions. You look for the next 3 months. So let's just watch stacks. Market's just open. So you watch basically the market, and you look at 3-month cycles, which is what the investment firms usually work in. And COT's great because it gives you the long-term view on where they're positioned long-term, which usually is the way that the market will tend to go over a period of 12 weeks or so. When you've got inflation figures coming out each month and interest rate changes each month, the long-term view changes each month. So what you see on COT is delayed by around about 2 weeks anyway, because you're seeing the figures from the previous week, which is the previous week's standings in the futures market. And the other problem, obviously, is by the time you get that data and you take a position, 2 weeks later they release new rates and the market shifts direction and shifts bias. So all you're seeing at the moment is the market pricing in movement, which is what we saw. Things like the US dollar. You see US dollar basically having a bit of a weak one for a couple of weeks. The reason this is being weak at the moment is because it's been selling into the rate announcement, which came out as expected. So now we can carry on with our move in the expected direction, which is upwards for the US dollar. Yeah, so it doesn't really, I don't think, work as much at the moment. So yeah, I'm not using it. I used to use it all the time. I used to use it I used to be a stock trader, so I used to use it all the time in stocks. But I used it in Forex for long-term analysis. But to be honest, 9 times out of 10, COT falls in line with the 72 MA, which is the quarterly MA. That's the monthly and the quarterly moving averages on the daily chart. If you stay in line with these, you're staying in line with COT most of the time anyway. This is the big boys' directional bias, isn't it? So these lines I've got marked on the chart here, just out of interest. This is my analysis I did yesterday on FOMC. So these are the previous 4 FOMC releases. I just wanted to get a bias idea. There is no bias. So there you go. I didn't post it because there was no bias. There's no indication of what it was going to do. So no point in posting it. Useless data. Right, just about to come. We've got 1 minute left until the close of this candle. So might be quite a short one this morning. I'm going to do some scalping this morning, hopefully, depending on what happens with the open. But there's nothing on ADR. We've got some weeklies hit. Aussie, New Zealand, surprise, bloody prize. Hopefully, we're starting to get some kind of movement on this. Look at this move. We haven't had a profit take now for 285 pips. This is a 70 ADR pair. We are over 4 ADR away now with no profit take. So this thing's coming up at some point soon, and I'm positioned to take full advantage of it when it does. But yeah, this thing's obviously extended on the weekly. Euro New Zealand also extended on the weekly. We've got a very strong New Zealand dollar at the minute. That's already bounced. You've kind of missed that one. The weekly extension happened yesterday. So your M15 reversal alert here was your entry. That was a messy one because that was in FOMC. So you'd be forgiven for not taking that one yesterday. But that was the weekly range extension there. And New Zealand dollar CAD, again, strong New Zealand, only triggered off of FOMC. So again, hard one to really get into. But yeah, nothing on there at the moment. We've got no monthlies hit at the moment. We're only in the first week of the month. Okay, opening range is in. There goes my bias again. I've got a problem today. I do not want to go long indices because US dollar's pumping and I don't want to go long indices. I want to go short. So I don't want to take an opening range break to the high. Looks like my platform's froze anyway, so it doesn't really bloody matter, does it? So I get so fed up with Robo Forex. I was on the verge of changing this month. Stefan, okay, I have an Excel sheet where I type in every weekend and use it all the time. Yeah, use it if you find it useful. There's no right or wrong answer to anything. Everything's got a use if you can find a use for it. It's only, but I mean, with the COT report, there's really only one column that's important, which is the flip, which is the difference in futures open interest. That's all you really should be interested in, because you're interested in how many more people are going long and short, and that tells you which direction they want the market to go in. And they're the guys with the money that moves the market, so therefore we should be paying attention to which way they're headed. But the trouble with the COT, as I said, is it's all delayed by 2 weeks, so you're always behind the game. So it's very, very useful for long-term bias, but no use at all for intraday or swing, short-term swing anyway. So we've got a strong US dollar at the minute still. So obviously when we get a strong US dollar, we tend to get weak indexes. So I'm kind of keen to see what happens with the US dollar this morning. The DAX wants to push. The other indices look like they also want to push this morning, but we don't appear to be particularly strong. One thing that could happen today, obviously, is we come back and start testing propulsion gaps, ready for a long move to the upside. So if that happens, obviously we will get a bit of a pump on the indices. But equally, the other thing we've got potentially to worry about today is the pound rate announcement, meaning that we might get a sideways move. Let's just have a quick look at what's happening with earnings. What did we have last night? Qualcomm and Roku. Barrack, Moderna, Block. So these are all aftermarket. So all the tech is aftermarket. There's not an awful lot that's really going to affect any of the indices massively this morning. I'm going to try one long on the DAX. Okay, so we've got the opening range break. We'll see if that holds. Stefan, I always look at the data and look at the time period the data is for and try to find out what they were thinking. Yeah, the trouble with the COT report is you can get really lost. I mean, I don't know how many columns there are in that thing, but there's a good 100 or so, isn't there? You can get really lost in all the data in that. If you're trading intraday, the COT report is absolutely zero use because you're looking at last week's information. Got no bearing whatsoever on this week. But for longer term, yeah, but if you're using an H4 or a daily chart, then COT is useful. Anything other than that is just not really going to help much. I'm just wondering where we're headed if we're going to the upside. Let's have a quick look at all the indices. So I will flip through the dashboards this morning in a bit, but there's not an awful lot, obviously, to look at. So I'm kind of focused on scalping a little bit more this morning. I just want to see what happens when we retest the opening range high. If we can, we're going to put a propulsion gap in here at the moment. So I'm interested in adding here. So looking at the DAX yesterday, obviously we had a big down day because we had a big up move on FOMC. So indices obviously all came screaming down. So remember I said yesterday, I'm looking for us to start our next leg down. Measured moves. Yeah, this is where we should be starting next leg. We're nice and orderly. We are very orderly people, aren't we, us traders? So yeah, looking for next leg down to start. I'd say that's a pretty good start, wouldn't you? Which is why I'm short biased today, which is why I'm finding this really hard to hit the buy button on this thing at the moment, because I really do not want to be long on the indices today, not looking at what's going on with the US dollar. But the US dollar is pulling back a bit. I'm just going to bank my pound US dollar. I'm just going to get out of that because I don't want to concentrate on it as well. $600. I want to. I'm looking for the next leg down. So obviously, as soon as we start, if you look at the DAX when we start our new legs, right? Let's class that as a leg, that as a leg, that as a leg, and that as a leg, right? So when we start our next leg down, it always starts with a big bear candle, and then it's followed by another big bear candle, big bear candle, big bear candle, big bear candle. That one didn't, but then we had two big bear candles, big bear candle, bear, 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 big bear candle. I just can't get around the fact that we should be having some bear movement today, especially off the back of FOMC, where you're going to find a lot of people today are like, wow, brilliant, excellent. Let's get our money in the US dollar, which is going to drive the indexes down. So I'm having a hard time being long on this because my brain is saying next leg's on the way. However, there is a chance we're going to get a pullback on the US dollar, which is why I'm kind of keenly watching my other monitor to see what's going on with this US dollar. Because if we get a reverse alert on the US dollar CAD, for example, here, or the US dollar, whatever, we might get a pullback on the US dollar, which means we are going to get a little bit of a rally on the indices this morning. So I'm just watching. What do we get here? Okay, so there's your gap fill. So thinking ahead of myself, propulsion gap. Yeah. Okay, so now we're in the gap. We're in this candle. So when this candle closes, the propulsion gap is only going to be that now. Kind of done it, haven't we? We've retested this bullish move, and the bulls are stepping in and going long again. So if we break up here, I'm definitely interested in adding. So I'm going to buy stop above the high for a second position. Yes, I only use it for my swing trades. For intraday, I use a very basic bias and entry strategy. Nothing fancy. Cool. Keep doing what you're doing. If it's working. So we are starting to get some bearish price action on the US. Pound US, interestingly enough, is actually not. It's holding up quite well, the pound US. We got some sellers on the pound this morning by the looks of things. Apart from against the Swissy, because the Swiss is obviously very weak this morning. So other than that, everyone's jumping ship on the pound. Jumping ship on the pound ahead of the rates. So yeah, I'm going to use US dollar CAD as a gauge on the US dollar. Actually, I'm going to use Euro US dollar because that is the Dixie upside down. So yeah, as you can see, we've got some weakness on US dollar. So we might get a pump this morning. Just going to hold that position. I'm going to add to it on the break above the high. As for where we're going, I've forgotten it. I'm probably just going to go for that this morning. not get too greedy. Just do 50% retracement, which is that resistance. Right, so let's look at the 4 hours while we're waiting for the DAX to do something. Aussie dollar yen. Again, I'm not trading any yen at the minute because I've got no idea what the hell this thing's up to. Let me just get these lines off. This is the old FOMC lines. Don't need those. Don't need that symmetrical break. All that. So yeah, Aussie yen. Yen's coming down. Aussie was coming down against yen. What's going on with the rest of the yens? So bearish on the Swiss. That's because of the Swiss franc. Pound yen is bearish because of the pound. New Zealand, US is bullish. It's very difficult to tell, isn't it? But we're extended to the downside on this. I've got no real directional bias still on this thing. Overnight news. We didn't get anything coming out of Japan, particularly last night. Nothing exciting. So I don't think there's any change on, what's about Sunak? Extend windfall taxes on oil and gas companies in order to raise an estimated 40 billion over a 5-year period. Okay. Okay, that's good. So yeah, so there's no news over on the yen. Basically, the yen is literally just all over the gaff at the minute. We've got the intervention every now and again, and that's not holding, is it? So if I was going to be trading the yen, I would be looking for that. So I can hear something bleeping. One sec. Right. It's the phone downstairs on its charger. So it's got a loose connection. So yeah, I would expect intervention in the yen to drive everything down against the yen at some point. But the intervention we're getting at the moment isn't holding up. So we're just getting it pulled back all the time. So I'd be looking really, if I was going to take anything on the yen, I'd be much more interested in shorting it. Because the Bank of Japan is going to intervene and you're going to get those big boom moves down, which are going to make profit, and it creeps back up and then it gets these big slams down. So you're much better off, I think, at the moment, assuming that every move up is a flag that's going to break. So I'd rather take any extensions to the upside on the ends if I was going to take them. But up to you. DAX is pulling back quite hard at the moment. We're just retesting the opening range high. See if we hold. Obviously, we're not going short until we break the opening range low. So if we're going to continue a structure to the upside, we've got anywhere down here really to add, but I might stop out on this one this morning. So yeah, Aussie dollar yen is extended, but I'd rather be looking for the opposite side. Aussie New Zealand we know about. It's massively extended. If you want to get into something, and you want to scalp something, this thing's going soon. I'm telling you, this thing's going soon. Bloody better. We just had a retest this morning on the reversal alert. If we can get the highs broken, this could be it. As I keep saying, this could be it. It could be it. At some point, this thing's going to have a profit take move, and we're going to start a rally. We've got no news coming up on anything Aussie or New Zealand related at all for the next couple of days. So we might get a little bit of a push. We've got inflation next Tuesday. Apart from that, God, look at next week. What a rubbish week for news. Got CPIs. That's it. Christ. Next week's going to be interesting. So yeah, that's massively extended. Looks great for longs, but it's looked great for longs for a while. So yeah, we just need to wait. This area here that I highlighted yesterday, which was this support resistance area here. Yeah. We're right bang in that at the moment, fully extended. Down below 20 we were yesterday. So, you know, look at what we should now get some kind of move back up to the upside. Yeah. So I'm holding it at the minute. You know, I'm right ready to pounce. We're just waiting for the buyers to step in. And at the moment, because we've got this strong New Zealand dollar, it's just not happening. As soon as that Aussie weakens off, we're going to get some strength and some buyers coming in, and we're going to get a profit take move on this. It's just a waiting game at the moment. I'm trying really hard not to scale in too heavy on it, because I don't want to get to the point where I've got to close some of this out in loss. And as you've seen before, every time I do that, as soon as I close those positions out in loss, that is when it goes. And I'm always just a little bit too over leveraged. Stopping out on the DAX. Oh, not yet. Nearly. Nearly. See what happens. So yeah, Aussie New Zealand, very, very, very extended. Euro yen, another yen pair, very extended to the downside. Euro isn't the cause here, it's yen. Yeah, so the euro is all over the place, but the yen has got a little bit of strength. So again, if you want to take a long, obviously this is a nice bullish pair, but it's only a bullish pair because of the weakness we've had in the yen. Now the intervention has started on the yen. Yeah. You know, if you are taking longs and they decide to intervene, and it's really going to depend on when the US dollar gets back up to that 150 level, that's when they're going to intervene again, I would imagine. If that gets up to that US dollar yen 150 level, just as you're starting to take a long, bang, it's coming down. So from a position perspective, again, I would want to be getting in up here and taking advantage of those interventions. If you want to get in with just normal positions with stops, yeah, reversal alerts and go for longs. You know, we're on day 3 down. Very high probability we are going to start to get some movement to the upside. Any ADR hits to the downside, probably good reversals, but it needs to get there. So I'm not really interested in that. Pound yen coming down really hard this morning. The pound was obviously weak this morning ahead of the rate announcement at 12 o'clock. I wish I hadn't got out my pound US dollar. That's really annoying. Never mind. So yeah, again, that one massively extended on the 4 hour. But you know, it's the yen. Really don't know, and you don't want to be taking any pound today ahead of the rate announcement. We've got no idea where it's going to go. I get the feeling that we might see it rally a little bit off of the announcement, which is 12 o'clock. So if we come out at 3, which I think we will, I think we'll be pretty good. We don't deviate from forecast, as you can see. It's very rare for us to deviate from forecast. The only time we have deviated from forecast is on the initial surprise one when everybody started to put interest rates up. And everybody kind of deviated that month, didn't they, really? So I don't think we're going to get anything but 3. You saw what happened with the US dollar yesterday. Similar sort of thing will probably happen to the pound today. We'll probably get a whipsaw. So if you see a big, strong move to the downside off of it, and you see an obvious liquidity run and stall, nice fade, potentially. But bear in mind, you don't want to be trading a pound against the US dollar, because the US dollar is obviously going to be on a mission today as well. So you want to be trading the pound against something weak. Swiss franc is the obvious choice at the moment. Swiss is really weak off the back of that interest rate. The CPI figure. So that's probably the best long at the minute. But yeah, it's extended the pound yen. So other extensions we've got: Aussie dollar yen we've covered, Euro yen we've covered, pound yen we've covered, New Zealand dollar yen we've got on the hourly on the 21. So this is the 14, 21. So the 21 is a pound yen and Euro yen. The 14, we've got the New Zealand dollar yen extended to the downside. Again, yen strength coming through at the moment. This is a mess, this one. So, we haven't really turned at resistance here, have we? We've turned at that propulsion gap, but no real resistance at all there. Don't really like that at all. And the pound US dollar extended on the hourly. This is obviously based on that massive US dollar strength that we've got at the minute. Why did I get out? An idiot. I stopped out in the DAX. So we're testing the lows. Cancel that pending off. Do I want to take a short? I'm not going to take this candle. I'm going to wait and see what happens after this candle. What I'm worried about this morning is because we've got another big rate announcement, I'm worried about going into rotation this morning, in which case you want to be buying up the lows and selling the highs. But just going to watch this for a minute. So yeah, pound US dollar, very nice extend to the downside. You don't want to be trying a long mean revert against the US dollar today. I would leave the US dollar alone today unless you're shorting it, i.e. going long US dollar. It seems very, very strong this morning. You just got to try and get into a pullback. It's not really giving any opportunities, is it? So, tricky. I'm already out on mine. Apart from that, as I say, there's nothing else really extended. It's really really odd week this week. As I say, I've got no risk on. The only risk I've got is this silly Aussie New Zealand. So I can't really make any progress this week. I'm just rejecting the lows on the DAX. Has anybody got any pairs they want to look at specifically this morning? If you have, let me know. Steam train this morning. Where's that headed? Could be anywhere. As far as I'm concerned at the moment, we're heading down here. So US indices yesterday, obviously, we had down days across the board. And again, same thing with all the US indices. Next leg starting. This is why I want to be short the indices today. Do I want to take this? Is this just going to trend today? That's the question. The top is 8,000. So it's roughly 800 pips to the, what's the opening range high? 600. Okay, I'm putting a sell stop under the low. We're pulling back inside. So if this is going to break to the downside, we may well just get a little bit of a pullback and then a next leg down. We might just go. It depends. This US dollar is very strong this morning. So I wouldn't be surprised if we just get hammered down this morning and everything just collapses. The US indices are obviously looking very similar to the DAX. But we haven't made new lows on these yet. So if we get a new low form here on any of these indices and we flush, the DAX is going to get dragged down quite quickly with it. So it's worth watching the US indices just to see if these attempt new lows. If they do, I'm just going to get gathered up in a short position on it. Stop above the opening range high because the opening range high breakouts failed. So this is basically textbook, same as yesterday. Yeah. if we look at yesterday. So yesterday we had the opening range breakout high, fail, and flush to the downside. So looking for the same today, opening range high, breakout, fail, flush to the downside. But today's downside flush could be a lot faster depending on what happens with the US dollar all morning. So putting back quite nicely at the minute. Lee, we are still in the earnings. Yeah. It's the end of the earnings, though. Today's the last day. There is still earnings. I mean, there's earnings all the time. This next week, we have still got earnings next week. But the earnings next week are, they're fairly big companies, as you can see. And we've got Walt Disney in there. I mean, these are all big companies. Obviously, they're all listed companies. AMC, fairly big. Take-Two and Activision. But this today is kind of the last day of the big, sort of what they call the earnings fortnight. Earnings fortnight is the biggies, all the big guys, yeah. Microsoft, it's General Motors, it's the big ones, the top 10% in the indices, top 10, 15%. Earnings fortnight is here and here, yeah. So it's all the biggies, and Tesla the week before. So when today's over, we got PayPal, Starbucks this afternoon, and obviously Coinbase. But apart from that, we then go into the sort of the minor earners. These guys, if you look at, let's take, I don't know, the NASDAQ, for example. You've got 100 stocks in the NASDAQ. There's around about 10% of the stocks in the NASDAQ make up around about 25% of the weighting of the NASDAQ. So when these 10% move, they have a much bigger impact on movement than the rest. What we're getting to now are kind of the dregs. So these are the guys that are sitting in positions 50 to 100 on the NASDAQ, for example. When they move, they will move it. But it's got to be a big move to really shift the index. So we're getting to the point where, when you've got, think of it like a plane stalling, we've had the big earnings rally now, and we're just sort of like, okay, well, we're not really worried about the rest of this lot. Let's continue in our bear market. And that's why I'm looking short, because yesterday was kind of the topple day, as far as I'm concerned, as to where I'm expecting us to start our rollover, which is, next leg. So we are still in earnings, and there will be impact on them. But they're a lot less consequential, unless you get one that misses massively. If you get somebody that forecasted $10 billion profit and then they make a $10 billion loss, they're gonna dump that stock like it's going out of fashion. They're also going to dump the sector, so the sector will shift. Tech sector will drop. For example, so it will still have an impact, but it's just less. You have that 2-week period where it really goes nuts, and we've just had that. As you can see, look, you can see this is earnings fortnight. Bang. It's done. Not really going anywhere very fast, are we today? Might be a dud today. Pound US dollar. I hate you. I hate you. I got out here. Where did I get in? There. I got in there. I got out there. You can see why I got out. But it's only $600 left on the table. Right. So we're starting to pull back a little here. We're struggling though. There's not a lot of buyers this morning. right, let's have a look at oil as well. What happened with oil yesterday? I wasn't paying attention to oil. I did take a trade on oil yesterday, which I posted in the Telegram group, which was a lovely trade. All the way up there. I can't remember where it was actually. It was on my valuation account, so I haven't actually got the trade. I think I posted it in the Telegram group. It was this breakout, wasn't it? Here. It was that candle. That one there. So I took the break of that candle. This is when the oil news was announced, the barrel count, 330. So I took the break high and I got out somewhere up there. Can't remember. Somewhere up there I got out. So oil, obviously we're expecting, there's our target. P formation high, pull back. We're just on the next leg, aren't we? So just buy the dips. Same as yesterday, buy the dips. Have I got the... Wait, one sec. No. Just seeing if I had the FTSE. I'm just interested to see what the FTSE's doing this morning. Not a lot. Sideways. Okay. So I'm going short on the DAX. I just was interested to see what the FTSE was doing, purely because the FTSE and the DAX tend to move quite similarly. Obviously, it's the Frankfurt session and the London session. I wanted to see if the FTSE was dropping or rallying. It's not. It's going sideways. So if the FTSE is going sideways and the DAX is doing pretty much the similar thing, there's a good chance we might get this breakout short this afternoon, this morning. What I didn't want to see was the FTSE rallying and trying to make new highs, which it's not. So doesn't seem to be an awful lot of buyers or sellers in this at the minute today. So yeah, oil today. Just flipping back to oil. We're in the middle of a pullback, so good potential buy spot coming up if we're going to continue our market structure to the upside. Anywhere around here would be lovely for a long. Failing that, plus that, just move and then pull back into here and then move up to there. So we're either going to get a small pullback on this leg or we're going to get a pullback on that leg. So anywhere down here towards ADR today, or if they take out yesterday's low and push back up again. So, you could take a long here. You could take a long on a yesterday's low sweep or take a long at ADR. But obviously the goal on oil is moving up from here. So using the 24 basically to keep ourselves moving up. Okay, so we've got a nice bearish engulfing there on the DAX. Outside bar. So sellers took control and defending the down move at the minute. We need to see if we can get some more buyers coming in. Pound US dollar is still coming down like a loony. US dollar still pumping. So we've got ADR on US dollar Swiss. Again, ADRs, just use your head. Don't try and mean revert that. Again, if you want, just you'll find it hard to get a reversal on it. Oh, come on, Dax, what are you up to? So nobody's, morning, Stevie. Morning, anybody else I haven't said hello to? Anybody got anything else I want to look at? Any other pairs? If you have, let me know. I'm going to watch oil for a long as well this morning. If we get, I think I'm going to watch M5 and look for a reversal alert on M5. Next reversal alert, I think we'll get on M5. I'm just going to take 0.5% risk on just a fairly small position, half position, and try and get in and maybe scale in on the way down for a long. DAX is just trying to break previous high. Looking like it might be a rotation day, isn't it? In a minute. So just range. You think Japan will intervene against US dollar yen? Yes. This is why I'm saying, I said this, I don't think you were here, Stevie, but we were looking at the euro yen. It's very nicely extended at the moment. Obviously, we've had a bit of weakness on the euro, but the yen has obviously been a little bit strong today, and recently over the last sort of day or so, it's held up very well. So there's an opportunity for a trend continuation trade here. But like I said, I would rather be waiting for an hourly RSI extension to the upside or a 4 hour. I mean, you're not unlikely to get one. But wait for an extension to the upside, because these are really easy to take profit on. Yeah, if you're pressing the short side, when they intervene, you are in. You're not just in the money; you're milking it, making a fortune. Because this thing's going to come down 2 ADR, 3 ADR in an hour. So I'd rather be pressing the short side, but there is a good long opportunity there on the euro yen. We've had a nice push down. It hasn't taken any profit take yet at the moment, but I said, because we got a strong US dollar, this US dollar keeps pressing the yen and we get back up to the 150 area, highly likely they're going to stick another intervention in. So I'd be interested in shorting US dollar yen if we get any ADR hits, decent ADR extensions, RSI extensions on the 4 hour or the hourly. I'll be interested in shorting it. Just because I think we're probably going to get another one. But you know what it's like with the yen. The Japanese will say, we are keeping a close eye on the Forex market. We're doing this, we're doing that. Any moves in the FX market are undesirable. And they'll sit there and they'll talk for a week. And then all of a sudden, you'll get an intervention and they'll go, wasn't us. Like they did with that one. It's like, wasn't us, nothing to do with us. It's like, well, who was it then? Yeah. The banks didn't bankrupt themselves because they were long. You bankrupted them. Japan. There's only one person that benefits from a move like that, manipulation like that. The person that did the manipulation. It's the Japanese. So yeah. So yeah, it's difficult to know when it. This is the thing, we can't tell when it's coming. I was on this. Well, this is where I made that 10%, wasn't it? I was on this, wasn't it? I got in here. That was the entry from heaven, wasn't it? On the 5 minute. I just shorted the US dollar yen, hadn't I? There. I think that was my entry, wasn't it? I saw that, we pulled back, and I got in something like there, wasn't it? And it just went boom. That's lovely. Most perfectly timed trade I think I've ever done. Obviously 100% luck, because no one can time the market, but nice when it happens. One of those, let's go into all the groups and show how amazing I am, because I got one trade right. I'm in DD, still short the US dollar yen from when US dollar pushed up from September. Look at another good short from 151-ish. Yeah. So with obviously the US dollar yen previous intervention, and then that failed intervention. We had a nice drop, but this was the US dollar being a little bit weak rather than the yen being a little bit strong. So we've got a fairly strong yen at the moment. Everything else is coming down against the yen at the minute. So obviously key areas are that high and this propulsion gap. So this is where I think, like I said, 150. This is where I think the Japanese will go, right, we're not having it again, guys. Sorry. We're going to intervene. They are short here. They will do anything in their power to make sure that they stay short there. They want this down. Yeah. They've tried to intervene. They failed with the intervention. Yeah. They've tried to intervene again. At the moment, it's working, isn't it? Yeah. If it stops working again, I think they've got enough juice to make a second run to the downside, which is why I'm saying I'd rather be hitting the short button than the long button at the moment on anything yen. I don't really want to hit the button on it at all, and I'm not going to, unless I see something. You know, if we're watching this on Tuesday next week or whatever, and all of a sudden we get a 150 ADR hit that takes us up to 150, I will go short and I'll stop there, because when we get that, I'm going to be laughing. But I will get out of it. I will not get into this without a stop. Not because I don't think you could scale into it. It's just that the problem with the interventions is when they fail. An intervention is basically a government or a bank's a last-ditch attempt to solve a problem, a financial problem they've got. Look at the Bank of England. We intervened when Liz Truss screwed up the finance. The Bank of England intervened, and then a week later they went, actually, really sorry, we can't do this because you screwed it up. We're pulling in different directions now, so we're not going to do this anymore. If that fails, you're in trouble. Because if you can't manipulate your currency to defend it, it's just going to go one way. It's getting worse and worse and worse. So we've had a few attempts now. This one, though, seems to be holding. And it was a much bigger one, because the thing is, obviously, with Japanese intervention is to pile into the yen, the money comes out of the US dollar. So the US dollar yen moves much more dramatically. The difference now is we've got a strong US dollar. So we had a strong-ish US dollar when we had that intervention. And we managed to do a big old hit on it. So I just get the feeling, because we've got this US dollar move now, there's going to be another attempt soon. But you just don't know when. So, but I'm not just going to get in for getting in's sake. I need something, I need that. I need an extension and a reason to get in. But yeah, I like it. Antonelli. Key levels, pound US dollar. Well, I can't really answer that. What time frame? What's your strategy? What are you doing? I've no idea. This key level on the daily chart is totally different to a key level on a 5-minute chart. Key level on a 5-minute chart is there. That accumulation. For a short, It's got nothing to do with the hourly chart. Key level on the hourly is there, and there, and there. I don't know. I can't really answer that question. What do you think about the US index? Looks bearish. Well, it's bullish at the moment. Flip this. I haven't got the Dixie on here. Have I got the Dixie on my... I got the Dixie on here. It's going to be in there, is it? It's not in there. I've got the Dixie. That's a terrible chart, isn't it? Can't even see that, can you? You've not got a bigger chart for the Dixie. Bloomberg. Yeah. Oh, Bloomberg's just advert. God's sake. Too much advertising. Can't even load the page. Investing.com. There we go. That's a bit of a better chart, isn't it? So yeah, I mean, the US dollar index obviously is going to be. I mean, it's bullish, obviously. What did you say? It's bearish. Looks bearish. Why does that look bearish to you? Depend again. What time frame are you looking at? I mean, the US dollar index is. I mean, from now after yesterday's FOMC, is fully bullish. Yeah. Okay. So at the moment of FOMC, it was bearish. Yes. So it was bearish yesterday at FOMC. Because the market was selling into the rate announcement. Remember, I said that what they do is you will, before a rate announcement, you will quite often, a couple of weeks before a rate announcement, or an interest on in. Sorry, one sec. Just need to take a short on the DAX. On the other platform, one sec. Going short one on the DAX. Decent rejection there. Oh, I'm already short one. Whoops! I've just added to a loser. Oh, that was silly. So I haven't got this position on my funded account. I've got this pending, which hasn't triggered yet on the funded account. I wanted to get into one short. Just seeing that we've got 15 minutes worth of upside rejection, potentially for a leg down if it's going anywhere. It's bloody so slow at the moment. But yeah, what they do is they sell in, they manipulate into the rate announcement. So they price in what they expect the rates to be, and that will quite often be a move back. So in the respect of the US dollar yesterday, we saw them pricing in the rate announcement ready for a pop. So it would be looking bearish. The US dollar has been dropping for a couple of weeks, hasn't it? Yeah, we've had a little bit of down. You can't really tell there, can you? Pound US dollar. There you go. So we've had a push up there. Euro US dollar has been pushing up against it. It's coming down a little bit there now. But yeah, I mean, I don't really look at the Dixie much. Doesn't really matter to me. The Dixie's obviously gives you an indication of whether the US dollar is strong or weak. I can tell you whether the US dollar is strong or weak by looking at the other pairs. It's but for me, what I'm interested in is it strong or weak against the euro? Is it strong or weak against the pound? Is it strong or weak against the yen? It can be a lot stronger against that than it will at the moment because the yen's strong. Again, it comes back to this, currency strength FX pairs are a two-way street. If you've got something which is weak against something which is weak, you're not going to get a lot of movement. If you've got something weak against something strong, it's going to move very fast and hard in one direction, isn't it? So looking at the yen, yeah, yen's been very strong since 8 o'clock last night. What's been very weak? Aussie dollar. So if you look at the Aussie dollar yen, you will see it's come down massively since 8 o'clock last night. Yeah. So what one individual currency is doing, like the dollar index, the Dixie, doesn't really bother me. I can tell you what it's doing, because if I look at every US dollar pair and every US dollar pair is going like that, I can tell you the Dixie's going up. Obviously it is, because everything's coming down against the dollar. I don't really pay much attention to it. Oil coming down, reversing. Yeah. So I'm watching oil for a 5-minute reversal alert. So looking at yesterday's lows, obviously it's an area of interest. If we sweep the lows, get the liquidity down there, pull back above it and get a reversal alert there. But failing that, if we take out these lows from yesterday, I'll be looking sort of anywhere really down there. But hopefully we're just going to pull back and run like we have been doing. So should be looking for a leg from here potentially on oil. Oh, for God's sake, DAX. Give me one of those days today. Don't want to be trading today. Indices are in a bit of turmoil at the minute, by the looks of things. Reversing nice H4 candle. Yeah, so we're taking out this low at the minute. We've got another 3 hours left on this candle though. So if this ends up being bullish, obviously we got decent rejection there. This is where we obviously pull back into. Buyers stepped in, they pushed down again, buyers stepped back in, made a new high. We're pulling back down, retesting this area where the buyers stepped in previously. So if we get here, if this low just gets swept and taken out and goes back up again, got loads of ADRs going off. That's pound US dollar. Oh, don't you just hate it when you get out of the one thing that actually does what you wanted it to do? That was my exit, entry and exit. Yeah. Yeah, so oil, yeah, I like it. Just waiting for a reversal of that, really. Looking good. DAX, I hate you. So DAX is just taking the opening range high again. So I'd be looking really, my stops on these two open positions are here and here. My stop on the funded account is actually 600 pips, which is just above these highs. So my stop is up here on that position I've just taken. So I've got plenty of room on that. I'm only 0.5% down on it, a 1% risk on. Not looking good though, is it? So ADRs, we've just had euro pound. Massively weak pound this morning, massively weak. This is everybody's jumping ship on the pound ahead of the rates. So just be careful with this. Yeah. Very, very strong move negative move on the pound this morning ahead of that rate announcement. Look at everything. Not so much the pound US dollar because there's a strong US dollar this morning, but look at everything and look at for potential areas that they're headed for. Yeah. So Euro US dollar. If we get down here, we're where we are at the moment. If we come down and take out that low, there's liquidity sitting there, obviously, on that run up, isn't there? If we come down and take out that low, and then push back up, we could well get the opposite move happening today. US dollar Swiss is the other thing that's hit. We've just had a load of hourlies alert. Ooh. There we go. We're lighting up a little bit more now. So euro pound. That's a mean reversion opportunity if ever I saw one. Do you really want to trade against that though? I mean, look, this is exactly what we had of FOMC yesterday, isn't it? Yeah. Take all the liquidity, run back the other way. Look at euro pound now. $125. Yeah. So shorts, 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 shorts. Those shorts are dead. Those shorts are sitting here. Yeah. If we got 125 ADR on this ahead of the rate announcement, not bad looking little short, is it? God's sake. Stopped out on one of DAX. I'm not going to trade this anymore this morning. I'm going to leave this short on. Obviously, I'm either going to get stopped out on it or I'm not. But I'm not going to push it anymore this morning. This looks like it's going to be range bound. What I might try and do is take a quick short at the highs and see if I can get a range bound trade back down to the lows. But this looks like it's in rotation. Have a long trade set up on pound US dollar for the 109 area. Uh, 109.210, I'd imagine. I've got a line down there. Yeah. Also, you got that level there, 200 ADR today. So if we get the pound tanking down to there, there'll be some limits sitting there, which will probably trigger and push it back. You're not going to get down there today. Yeah, this is only an interest rate announcement. It's not Liz Truss tanking our economy. This is just an interest rate announcement. You're not going to get a move like that. Saying that, this is the pound. How many times have we seen the pound do 300 ADR? It happens. It does happen, doesn't it? It's more likely to do that on the budget though, on November the 17th, rather than on the rate announcement. With this, I'm not quite sure why they're selling off so hard this morning, but they are. They're jumping ship. Either that or they're jumping ship, and they're not jumping ship. They're enticing shorts this morning, so that they can come back and grab the lot later. What's my feedback on FP markets? Never used them. Never heard of them. Can't help you there. I'm just going to move that ever so slightly, just in case we get a double top. It's worth the extra couple of quid just to not get double topped. So on the funded account, I've still got that one on. This is a new account, so it's obviously only started the account yesterday. So I've got that double top there, obviously, and I've got an ad down there. So if we are going to just go range bound, that's my position. I'm going to take a second there, try and get a breakout to the downside. And then as soon as I get that position triggered, I'm just going to monitor it. And it's either going to flush or we're just going to go range bound. So I'll just move average to break even on it. How about prop trading? Which is good. I feel many loops jump through. Yeah. So that account I just showed you there is an E8, a funded account. So I'm funded with E8 and with my Forex funds. And I'm also at the moment going through a valuation with for futures with the company I can't remember the name of ever. The company I can never remember the name of. Take Profit Trader. These guys. This is for futures. So I use my Forex funds and E8. I got funded with E8 again yesterday, another 100k account, which is the one I just showed you, which is at 0.8% drawdown this morning. Well, it's not actually, it's $2.5 grand up. That trade is 0.8 down. But yeah, if you want prop funding, you have got to jump through hoops. So yeah, E8, not EX. E8. So these guys are the ones I use. I use E8. I use my Forex funds and E8. Where's it gone? E8, where are you? There you are. Yeah. E8 and my Forex funds. The reason I like E8 is because of this. Yeah. So like yesterday, I got funded on a 100k account yesterday. In a day, literally. I passed stage 1 in London yesterday morning. I passed stage 2 in New York yesterday afternoon. I got the account yesterday evening, and I traded FOMC and made 1,500 quid last night. So yesterday morning I didn't have that. Today I'm sitting in 2 grand's worth of profit on a 100k account. You can't do this with any other prop firm. My Forex funds is the second best in my opinion. They got 10-day evaluation over 2 phases. They're a little bit cheaper, but you've got to do a 10-day evaluation, which is good. And I would wholly recommend, if you're going to go with a prop firm, go with my Forex funds rather than E8, because E8 does promote, obviously, the gambling mentality, which is let's go big, hard, and get funded. But the reason I like them is when you get funded with them, I'm moving back. I passed my evaluation with 1.5% risk on each trade. And I scaled in hard with 1.5%. So I literally only needed to get 2 or 3 trades, which worked, and I was done. Made 8 grand. As soon as I get funded, I drop back to 0.5% risk and 1% risk with wide stops. Yeah. So with these 1.5% scale-ins I was using sort of like 30-point stops in the DAX, which is tight. I would normally use something like 60 with 0.5% or 1%. But to get funded, and the thing is with prop firms, and I've explained this many times, you've obviously not been in here before, but with prop firms, it's a game. So what you need to do is do multiple evaluations, have multiple accounts running so that you don't overtrade. The thing that kills everybody in prop trading is overtrading. Yeah. You have a good day. You make $1,500. Yeah. In the morning. And in the afternoon, you're like, woohoo, let's try and make another 1,500. And what ends up happening is you lose that 1,500 and you go back to break even and you're like, I've got to get that back. So you overtrade and revenge trade to try and get back the money you've lost, which causes you to blow the account, which means you have to go back to square one and start again. Yeah. So if you have 3 to 5 evaluations running with different prop firms, you trade one prop firm, see how the morning goes. If you get close to your drawdown limit, you stop trading that one and you move on to prop firm number 2 and you continue trading on that one. Then you move on to prop firm number 3, continue trading that one, and treat every single one of them like a completely separate account. That will mean you will never overtrade one individual account and blow it, which is what everybody does. They do evaluation after evaluation after evaluation. The thing with EA and why I like EA is if I blow an EA account, a funded account, I can be funded again the same day by admittedly over leveraging. But I can over leverage. I know how to trade. So yeah, if I get in, right, let's say I've got this trade on now, right? This is tiny little risk, but let's say this was a 1.5% risk position. If I take another 1.5% risk position here, and it doesn't make a new high, and we are going to push down to these lows, I can put another 1.5% position on here, and by the time we get down to there, I'm in 3 to 5% profit. My target's only 8. So within 2 hours, I can pretty much have it done. Yes, I'm well over leveraged, and there's a high probability I might blow the account, but it's a 50-50 shot that I won't. If I take 3 evaluations in a day, I'm going to pass one. And that's how you do it. That's how you work the prop firms. And then when you get a funded account, I trade my funded accounts up to somewhere between 4 to 5K. And when I get them up to 4 to 5K, I stop trading them and I wait for my withdrawal date. With E8, it's 8 days for the first payment. And then 14, there you go. 8 days after the first, and then 14 days after that. So I trade it up to 4 to 5K. When I get it there, I go, brilliant, I'm going to withdraw that in 8 days' time. And then I move on to my next funded account and I trade my next funded account. And then I trade that one up to where I want it to, and I stop. If I can get both accounts up to between 5 to 10K, that's it, I'm done. And I can do that in 3 to 5 days normally if I'm having a good run. And this is why I started the evaluation yesterday on this other account, because I've got my other funded account on my Forex funds up to where I want it to. And I traded my E8 up to 2.5K. But I didn't want to touch it because otherwise I'm going to blow it. I need to leave that money there so I can withdraw it. So I spent $600 on a new evaluation and passed it yesterday. So now I'm trading this account. And if I get this account, this one's up to 2,500 at the moment. If I can get another couple of good trades in this morning and trade that up to 3 to 5K, that's it. I'm done. 15 grand. I'm done this month on prop. We're on the 3rd of the month. Well, not this month. It doesn't work that way because I got different paydays. But I'm done with these accounts. I won't touch them, leave them until I can draw the money out. And then when I draw the money out, start trading them again. And I blow them. I do blow them. But the difficulty with my Forex funds is I have to go back to square one. With my Forex funds, I can have multiple funded accounts, which is great. And with the 8, I can have multiple funded accounts. But I also trade futures. So I also flick over to futures. And futures is always 10-day evaluations. So yeah, that's how you make money in the prop game. That's how I make money in the prop game. Because you won't hold an account. You will blow an account. Everybody blow. I've blown loads of accounts. I blow them all the time. But if I spend, and I put a post in the Telegram group. If you're not in the Telegram group, go and have a look in the Telegram group. There's a link in the description below. But if I put in the Telegram group what I think, I did a quarterly analysis last month of what I'd spent on prop and what I'd drawn out of prop. So I'd spent, I think, I can't remember what the figures were, 5 or 6 grand on prop evaluations and drawn out about 15, 20. I can't remember. It's in the, I'm not going to have a look at it now, but it's in there. But that's the way you do it. You treat it like a business. I've got a 5K. If you've got a 5 grand trading account, for example, yeah, let's say you've got a 5K to trade with, right? What is the best thing to do? with that 5K? Is it to set up a 5K account and try and generate? I mean, a decent trader is going to generate 10% return a month consistently. Anybody that says they're doing more than 10 to 15% a month consistently, they're going to have lucky months in there. Everybody does. And they're going to have bad months in there. But that's your average. 100% return in a year on an account is a very, very good trader. So can you live on $500 a month if you wanted to go full-time as a trader? Because realistically, with a 5K account, that's all you're ever going to get. Unless you're gambling and you over leverage it and try and double it, which is going to end in ruin. So what's the best thing to do with that 5K? My opinion is to buy 10 prop firm evaluations, 10 to 20 prop firm evaluations. Yeah. And if you do 20 prop firm evaluations for 25K accounts, yeah, you've got $500,000 of funding there potentially available to you. Yeah, if you look at what a 25K account costs. Yeah. If you've got $5,000, you can do 20 of those, can't you? You think you could pass 1 in 20 evaluations? So that 5K you had that you're going to blow anyway, because you will blow it. 95% of traders will blow 90% of their account in 90 days. Fact. You're better off going and putting all that money, giving it all to EA, doing a load of evaluations, and go for funding there. Immediately, you've got 5 times the account size if you pass 1 evaluation out of 20. Even somebody that's a really bad trader is going to be lucky and pass 1 evaluation out of 20. All of a sudden, you're now trading a 25K account. What's the point in trading your own money? That's if you're going to scalp. I mainly position trade. So, but that's that's what you do. Well, that's what I think the best way to do it is. We had an alert come up. I didn't see what it was. CAD Swiss ADR. So it's putting off of ADR immediately. This is this week Swiss franc we've got off the back of the Swiss franc rates. Sorry, the Swiss franc CPI. It's pulling off of ADR though. DAX is pulling down. There you go. So remember what I said a minute ago. If I was doing an evaluation now and I saw that, I probably would have added a 1.5% position there with a 1.5% position on there. Brings my break even to there. I'm now in profit on this trade. If it pushes down and breaks that low, I'll add another 1.5% position there. All I need is 2 5-minute candles to the downside and I've passed an evaluation. Done. But I might blow it, but that's what trading is, isn't it? You've got 50% chance every time you press a button. Yeah, Armand, I've made 10% in a month a couple of times, but I'm more likely to be in 5 to 8% range, which is enough. Tend to get to target and stop trading. Exactly, yeah. Exactly. This is the problem with this industry. There's too many people out there showing utter rubbish, Lamborghinis and all this crap. It's just, there isn't a professional trader out there that I know that generates any more than 10 to 15% a month. If he was, think about it, yeah? Logically, if you could generate 100% return a month on a 5K account, do you not think Barclays Bank would be saying, I'll give you 25 million to come and work for us. Here you go, here's a 20 billion portfolio. If you can double an account each month, there is not a bank in the universe that would not be snapping your arm off. There is not a trader in the universe that does that. Most successful investors in the world are pulling in 8 to 10% a year. Not a month, a year. Yeah. Don't believe the hype. Seriously. Not real life. When you've been in this industry long enough, I've been in it for 14 years now, you just get desensitized to the Greg Seckers of this world and the people that don't show you, nobody shows you trading. Nobody shows you trading. live and keeps a running tally of what's going on. There's so few people out there do it. There's a couple. There's a good couple that do it if you can find them. 90% of them are not, and there's a good reason for that, because they're all blowing their accounts. Like Roger Banks, I see a lot of people, a lot of people follow Roger Banks, and I think he looks like he's a really good trader, but I've never seen any consistency there, which is, I don't know. I don't follow him day to day though, but he sells courses, so there's a certain, I don't know. There's a lot of smoke and mirrors in this industry, as you all know, and if you don't know, you'll soon find out. So potentially we've double bottomed. We've put in a lower high, which is good. So potentially we've got one of two things happening here. We're either going to come range bound, or we've put in a new low high. We're going to put in a higher low and go for a higher high here. So we're having a very slow, grindy push to the upside. So we'll see what happens. If that high gets invalidated, I think we're probably going to have a push to the upside. Roger massively over leverages. Yeah, and this is the thing. I've never followed. I don't know for sure anything about him. I know he's got a massive following, and he looks like he knows what he's doing, which is good. But yeah, I mean, if you're massively over leveraging, that's fine. But the thing is, with anybody, you don't know what their account size is. So if he's taking a trade where he makes 20 grand in 10 minutes, you don't know whether he's sitting on a £1 million portfolio. His MT4 might show 50k in the account, but that doesn't mean he's trading 50k. I've got 10k sitting in this account now, or 13 or whatever it is now, but that's not my portfolio. My portfolio is 30 to 50. It's what I need it to be, but I will never put it all into a broker account, because he's got his own broker account, Dominion Markets. Well, there you go. There you go. That's his business model. His business model isn't to make money trading. His business model is to make money as a broker and as an educator. Yeah, which is fine, as long as everybody's aware that you're all trading with Dominion Markets if you're with him, and you're all buying his course, and his course requires you to trade with Dominion Markets and deposit 5,000. 90% of people lose 90% of their accounts in 90 days. Every time you deposit 5,000 in Roger Banks' Dominion Markets, he makes 5 grand. There you go. That's a business model. I don't know that for sure, but I've seen it loads of times with educators that push. I get constantly getting phone calls and emails from brokers wanting me to do the same thing. Can you push us? XNES, constantly XNES email me every other week. Can you push us as a broker? We'll give you, they give me 50% of your deposit. There you go. That gives you an idea, right, of how much these brokers make. If you deposit 5k into an account, they're willing to give me anything up to 2.5k of your money that you deposit into that account in commissions, upfront commissions and ongoing commissions on the trades that you make. Why do you think they're so generous with their commissions? Because they are 95% sure that every penny that enters their brokerage of yours is going somewhere else in their pocket, because they're taking the other side of your trades, because you all lose money, don't we? Traders lose money. So they'll give me half of it. They're that confident you're going to lose. If you own your own brokerage, you get 100% with that money. Brilliant. I don't know. I don't watch other traders. That's not what I do. I had a new prop firm show up on my Facebook today. Payout same day 50-50 split. Can't remember what they were called. They're coming. They're cropping up. E8. These guys. You can actually set up your own prop firm with them. No, it's not in there. Funding process, EA. But they've got basically another arm to them where you can, is it EA? Oh no, was it somebody else? It might have been somebody else. Where there was basically a way that you can run your own prop firm, basically, but they fund it all. So there's these prop firms are cropping up all over the place constantly because there's people out there that will fund them. And again, the prop firm business model is not to take you on as a portfolio trader. The business model is to get as much out of you in evaluation fees as possible so they can use those fees to pay the people that pass evaluations the money that they're due. Because they know that 90% of accounts, again, will be bust within a month and you'll never get to payday, which is my problem with Apex, which is the futures account that I used to use. They only give you $1,000 of your profit in month 1, 2,000 in month 2, and then in month 3, if you can survive 3 months with that prop account, they'll pay you out everything. No one survives. The percentage is less than 0.5% of people will hold their account for 3 months in a prop firm. Less than 0.5%. Which is why I say the game is to have a good run, trade it up to an amount that you're happy with, and leave it until payday. Take it out. Do the same. And one day it's going to go like that and you're going to go, pop, pop, I've lost it. But if you can draw out more than you pay in evaluation fees, you have a business model. That's your business model. That's prop firms. It's the way to run them. But you've got to have more than one. And they're expensive. Yes, you've got to have, it's like anything. Capital, you've got to have capital. Whether you dump 5K or 10K or whatever into a trading account and just trade it, or whether you take that 5K and you buy 10 of them, or 10 of them, or 12, 15 of them, or 20 of them, your business model is to spend 5,000 to make X. You're not going to do it with one account. I can't do it with one account. I've blown loads of accounts because I can't control the market. I can't control when I hit this button. Yeah. Do you think if I could control the market, I would have taken this loss this morning? No. Yeah. I'm going to have days where I have trades and it just goes wrong. And I have to stop trading because I can't, I've got it wrong today. I've read the market wrong. Or I've read the market right, but the market's just not interested today. Yeah. By the time you identify that we're in a rotation day, you've missed the rotation day. Yeah. You have days where you just can't make it. I make all my money on trend days. I can't tell when a trend day is going to happen. So if I start an evaluation on day 1 and I've got to survive for 10 days, I need at least 7, I would say, to 8 trend days within that 10-day period for me to pass an evaluation. If I don't get that, I'm going to fail it because I'm going to get chopped around and I'm going to hit my daily loss level. I'm going to blow the account. And I don't know when they're coming, do I? I don't know when my bad run is coming. It's coming. It always does. But it's a numbers game. You just got to play the numbers. It's a very bad example for people who are starting out who think they can trade like him. Yeah. Got his own broker. Yeah. He's good on his trades scalping the pound yen and gold 30-minute time frame. Only 2 trades a day is his thing. Yeah. And that's good. That's a disciplined trader. And that's why I don't know how good or bad he is or anything. I've never spent too much time because what it seems to be on the live streams when I've watched the live streams they do is I sit there for 2 or 3 hours and I never see him take a trade. And then all of a sudden, the next day I'm watching the live stream and he goes through the trades he took yesterday. And I have to sit there. You sit there and you've no idea when the trades are coming. All of a sudden, my attention span is now off over here. It's over here. I'm watching something else. I'm reading something else. And then he takes a trade and I'll come back and I'll have missed it. I didn't see what he did. It's that there's a nice bearish engulfing on CAD Swiss up ADR, potentially for a short. But yeah, but that's good. He's waiting for a setup. Like me, I've been sitting here waiting for the opening range breakout. Just not getting it. So I'm not taking any trades now because we're just sitting in the middle of a range doing nothing. I'm not trading. So if he's waiting for a setup and there's only one or two of those comes along in a day, that's brilliant. It's good discipline. I've no idea what the strategy is, but again, strategy doesn't matter, does it? We know strategy's got nothing to do with whether you make money in the markets or not. Markets go up, markets go down, they move through time. When you hit that button, it's either going to do what you want, it's not going to do what you want over that period of time that you sit in that trade. No clue. Just, you know, when you hit the button is irrelevant. So that's a good sell signal. I didn't take that one. If I'd have taken it, will I be making money now? No, because all it did was push down and push back up again. Yeah. If I'd have taken a short there, yes, I'd have made a nice profit. But why would I? There's no setup there, is there? There's a lovely setup there with the 3-bar reversal short. But I wasn't watching the charts then, so I didn't take that one. And this is what I keep going on about, you know. Any strategy, people always ask, what's the strike rate of the indicator? No idea. Haven't got a clue. Which trades are you taking? What instruments are you trading? What time frame are you trading? What hours are you awake? When are you asleep? I can't tell you what the strike rate of that is because I've got no idea which ones you're taking. Are you taking every single reverse alert you get, or are you just taking the ones at decent support and resistance levels? Are you just taking ADR reversals? You know, there's a million combinations to hitting that button or that button. When you hit that button right now, you're either going to make money or you're not. Completely out of your control. Nothing anybody can do about it as to whether or not that makes a profit. If this thing, when I hit the sell button, comes down to here, and I do not take profit, and then it flies back up and hits a stop loss, I didn't make money. The guy sitting next to me did because he got out there. Yeah. What's the strike rate of the indicator? Well, for him, it was 100%. For me, it was 100% loss. I don't know. You know, and when people trade live on stream, you see them having a bad morning. You know, I get the odd DM. It's like, oh my God, you lost me X this morning. Well, yeah. Were you here on the 1st or the 2nd? No? Oh, never mind. Should have been, shouldn't you? Because I made 2%. But I'm just waffling because I'm sitting here through this crap today. There's nothing moving, is there? Roger Banks makes a fortune offline and then is 50/50 on live. Yeah. It's like a lot of traders out there, you know. I never poo-poo any trader. Anybody that's got the balls to come on and do a live stream, or you know, run a Discord channel or do a signal service or whatever. Anybody that does that, you know, you're putting your reputation on the line and you're sort of yourself out there for criticism, aren't you? So I never really poo-poo any trader. What I don't like is all these traders that make absolute fortunes out of courses. But you never see them actually take a trade. Yeah. There's a number, and you can probably guess some of the people that I might be talking about. There's certain people out there who are very influential in the Forex market, but you've never ever seen them take a trade live. You've seen lots of videos of them trading, but they've never done it live. I can show you, I can record a video. I can open up 5 MT4s now. Let's do it easy. I can open up 2 MT4s now, yeah? I'm not going to do it, but, right? Let's say I'm going to hit the record button now. What I'm going to do is hit sell there and buy there, and I'm going to record. I'm going to wait for this to play out over the next 2 hours, and then I'm going to close both of these. One of them will be a lovely trade in profit. One of them will be a loss. So I'm going to show you the recording of this one because this strategy works fantastically, doesn't it? Did I make money? No, of course I didn't. But you don't know, do you? Yeah, it's all unless somebody's sitting here doing it every day in and out, it's not happening, is it? And this is why people, you know, people DM me all the time saying, I love the fact that you show the losses. I'm in 5% drawdown on this. I'm in a deep hole. I might have to take a big loss on it. I do. UK numbers came out. What numbers? UK numbers come out at 12. It's only 9:30. Unless we got some minor stuff, have we? PMIs, yeah. Services PMI positive. Not nothing's going to move the market today until we get the rates. 12 o'clock. Anyway, that was a good long waffle, wasn't it, about prop firms and stuff. I'd rather tell people how it is. You know, I spent many years buying every signal service, every course, every flashing indicator under the sun, and none of them ever made me money. And it wasn't anything wrong with any system or strategy. It was me. None of it clicked with me. And that's why I say in the bootcamp, you know, do the bootcamp. Bootcamp will teach you everything I know and everything I know that works for me. It will work for me, or it will work for you, or it won't work for you. I don't know. You got to do it. Try it. Try everything. If you want to follow Roger Banks, follow Roger Banks. If you want to follow Bob, whoever, I don't know, just Tom Hugard. There you go. Tom Hugard is brilliant. Some of you might know Trader Tom. He runs a Telegram channel. Very highly respected trader. Trades live every day. Makes money every day. Makes losses many times. And I 100% respect him because he does it live. And he shows you his losses. And he shows you his winners. He does it live. You know, you can't dispute the fact that I'm short here right now, and I've made 0.5% loss this morning. It's live. And he does the same thing. You know, anybody that does that, they're worth following, because if you're seeing them do it day in, day out, you know they do it. They're the ones you want to pay attention to. The guy that you've never seen trade. There's one guy that I found on YouTube recently. It's a bald-headed guy. Can't remember his name. But he concentrates on other people's strategies and tries to improve them. And he sells a course for $300 or $400 or something, 300 or 400 quid. But you know, it's just, he's got a load of YouTube videos explaining a load of theory, but you know, he just doesn't trade, does he? He doesn't trade. He's not a trader. He's a course manufacturer. As I am a course manufacturer. Mine's on YouTube, free. Yes, I sell indicators, and they are a nice little sideline, but they're not. That's not how I make my money. The only reason I make money out of the indicators is because they take a lot of time to build, and I don't sell that many. I couldn't live off of it, put it that way. I couldn't keep my wife in her diamond jewelry or selling indicators. Not that she has any diamond jewelry. Can't afford it now. We're in a cost of living crisis. Have you not heard? Everybody's being squeezed financially. Right, this isn't going anywhere. Has anybody got anything else they want to discuss? Any other traders they want to talk about? I'm always interested in looking at new people. So if ever you find anybody you think is interesting on YouTube, you know, I do, when the market's like this, I do poke around on YouTube, and I watch live streams. There's a couple of futures streamers I watched for a while. There's one guy, I still follow him on YouTube. Matt, I think his name is. Yeah, Matt, Trades by Matt. He's a futures trader. He trades live every day. But you know, I spent a while watching him in his futures trades and stuff. And when I went through all of his videos and what he makes every day, he makes a loss every month. He has good days and he has bad days. But if you actually go and tot up his live on-stream earnings, it's all loss. And there's a lot of them out there like that. I'm always interested in looking at new people and strategies and all that sort of stuff. Do you have a good source for the COT explanation, especially for commodities? The I do. but it's part of a course. The best explanation of the COT report, I go and Google it, but the best explanation of the best parts of the COT report to use are by a guy called Anton Creel, who is an ex-banker. Again, he sells a course. I think he does run a prop firm, his own prop firm as well. But he's a long-term, again, it's a long-term trader. So again, only look into COT if you are looking for long-term swing. Otherwise, it's totally useless to you. But I don't really have anywhere. There's the best explanation of COT is in Anton Creel's course, and it's a course I've done, and he's very good, Anton Creel. But the reason and Anton Creel, I've never seen him trade live. I don't need to, because I can look him up online and I can look up his banking credentials. He's been an investment banker. He knows what he's doing. And the course is all about how they trade in investment banks, and it's very, very, very good. Very, very difficult for you to replicate though, because you will not have the capital. And if you do have the capital, you won't have the drawdown limit. So, if I could pay to block Greg Secker ads, I would. Yeah. Greg Secker. Again, he comes from a banking background, I think, Greg, but he sells a course and he sells software, and I'm pretty sure he's got a brokerage. And he wears eye makeup. I can't take anybody serious that wears eye makeup. Sorry, nothing against people that wear eye makeup, but yeah. Every day without fail, every day. In fact, let's try it. Let me refresh the stream and see who I get. Galileo FX. I was just going to see if I get an ad. Oh no, who we got here? Visionary Profit, Larry. Let's refresh, see if we can get Greg up. No, this is the stream now. Obviously, we're repeating the ads. No, I'm not going to get. We're going to get that descending thing where you start looking into yourself on your screen, aren't we? Yeah, I'm not going to get Greg up, unfortunately. I can have a look at. Let's have a look at one of my videos and see if I can get a Greg ad. No, I can't make it happen now. But like you say, every time you I haven't got ads on those, I think. It's not showing me video ads now for some reason, is it? Anyway, but yeah, Greg Secker, everywhere, isn't he? How long have I been trading? 14 years. Forex, stocks, futures. Started in stocks. Thoughts on stop hunting strategy? Beat the market maker. BTMM. Yeah, Steve Malrow. Again, great course. Never seen him trade. Steve Malrow and ICT were both taught by the same guy who basically taught market structure. Funnily enough, because it works. But yeah, BTMM, good course. Very hard to execute. A lot of the stuff you see me using is BTMM. Yeah. This, if you were using the TDI, which BTMM uses, this is the shark fin, which is basically the RSI extracted from the TDI. Again, watch the bootcamp. It's all explained. But yeah, great course, great theory. I don't believe in smart money concepts, though. I mean, you can call it what you want. It's not smart money. It's just the way the banks work. But again, it doesn't. It doesn't work. Everybody that does a course is looking for the holy grail. Yeah. Don't trade until you hit the stops is his mantra. Absolutely right. But you're not trading because it's hitting the stops. You're trading because there's a load of limit orders up there that the bank needs. Where it goes from there is irrelevant. Time of day that it happens to a certain extent is irrelevant. The problem with BTMM's course is he uses what are called kill zone well, ICT uses kill zones, but Steve Mallow uses kill zone boxes, which are these areas which are X number of pips away. The problem with using a pip count is the pip count is totally different on every instrument you trade. So therefore the strategy is flawed from day one. Because if you use a 50 pip kill box from an open, yeah, and something only moves 69 pips in a day, unlikely going to hit it, is it? Something that has 177 is going to overshoot it all the time. BTMM is too subjective, yeah. So it's all subjective strategy. And this is the problem with all strategies, which is why, you know, people ask me, can you teach me how you scalp? No, because it's discretionary. There's no hard and fast rule here. I see rejection, so I short it. I see rejection, so I long it. I see areas where price is likely to react, so I trade them. I see a bullish engulfing. Everybody jumps in long. I think maybe, maybe not, because we're in the middle of a range. Sometimes that will work, and I'll show you 1,000 pictures where it will. Sometimes it won't, and I can show you 1,000 pictures where it won't. What BTMM does and all the other courses is they only show you the winners. They don't show you the losers. So you suddenly think you found the Holy Grail. You start trading it and it fails. So you move on to the next. And then you move on to the next. And then you move on to the next. And you keep doing it. And there's a video on here about that called Why Are You System Hopping? And it's just basically our need to find where the hell's that then? It's probably in here somewhere. Why are you system hopping? There you go. It's only a little video. Oh, who's this? The masternakedtrading.com. This guy's funny. This guy says in one of his videos something along the lines of, I'm a really bad trader. And then this happened. And he shows his thing, and he shows one massive candle where he happened to actually get in short on it, probably because the news was just being announced, which he had no idea about because he'd not looked at Forex Factory's calendar. But he made a massive winning trade, and he can show you how to do that. Yeah, it's called hitting the buy button and the sell button, and hopefully the market will move in your direction after you've done it. No idea who the guy is. I don't know him at all. So, but watch this video. Why are you system hopping? If you haven't already. If you haven't identified your system hopping yet, that will show you why. But stop hunts are real. Yeah, stop hunts are real. Yeah, it's the market moving to find liquidity. But the problem is all these guys teach you to do it here on M5. And there are so many areas of liquidity, like there, everyone jumped in short because it looked like that was doing a stop hunt, and it didn't. Everyone jumped in short on that red candle there because they thought it was doing a stop hunt, and it didn't. Yeah, it's going to fail loads and loads and loads of times. Higher time frames, you're going to have a lot more success with it. And if you're going to take a stop hunt without a stop yourself, you can't get hunted. Yeah. So my take on smart money concepts is, if you want to be smart money, trade like the banks. The banks don't use stops because it's not very smart to put an order into the market that the banks can steal, is it? That's what I class as smart money. Don't trade with a massive position size, and don't put a stop in the market. If you don't want to get stop hunted, don't use them. Simple as that. I've had the first 5 seconds memorized of all of them before I hit skip. Can't stand him. Yeah, Greg Sacker, I presume we're talking about. Greg targets South Africans. He'd be like me in South Africa. But if you're in, you can't afford. I'm not being horrible to South Africans, but obviously South Africa's a lot less wealthy than other areas. Surely you wouldn't target a multi-$1,000 course to a country with something's going on. One sec. Oil's just moving down quite hard. Looks like we're going for yesterday's low. Yeah, I mean, why would you target South Africa? I don't know. Maybe, you know, it's all marketing, isn't it? You know, Greg Secker is the master of marketing. And if his data tells him that he gets more signups from South Africa than anywhere else, that's where you stick your marketing, isn't it? Stick your budget there. I've never even really, I have marketed to South Africa, I think, when I first started trying to push the course, which I used to sell. And again, I used to sell my course. What did I sell my course for? $99. Not because it's the best or the worst course in the world, because I don't want to charge people $500 for information. I've paid $300 for courses that I could write on the back of a cigarette packet. So I sold it cheap to try and get it out there as much as possible to recoup my time. And I recouped my time and my costs, and I stopped selling my course and put it out for free. There's nothing in my course that is a closely guarded secret. It's just the way it works. Greg target South Africa. I really want to see him now. I'm really annoyed that I can't find a Greg Secker video. I'm not getting any ads now. It's annoying. I really want to find him. This is how you scrub all your YouTube stats. Why am I not getting ads? I don't have many ads on my videos, to be honest. I do on the live room ones. I wonder if those will give me an ad. Oh, there's another one. Who's this guy? First rate markets. I haven't seen him before. He's a new one. FR markets. Is this what you were talking about earlier? Someone mentioned something. I'm just scrolling back through the chat. Somebody said, what's my opinion on something? Was this who you were talking about? Can't find it now in the chat. Yeah, I've not seen this guy before. He's a new one. Let's just click on some other videos. See if we can get some ads. I'd be very surprised if Greg doesn't appear in a minute. None of these have got ads on, have they? Oh well. The hunt for Greg will continue. I'm sure you all really want to see his lovely face. Anyway, can't find him now. This DAX is going nowhere fast today. Is a mechanical rule-based system is impossible to trade consistently? A stop hunt system could be developed with rules for confirming the trap. Yeah, mechanical systems are great. Mechanical systems can all be automated very easily. And I'll tell you my problem with mechanical systems. I have automated every mechanical system I have come across. I have more EAs than you have hot dinners. And these are all EAs that I've built. There's lots of them. Smash Days, brilliant concept by Larry Williams. Works absolutely brilliantly on the S&P 500 when we're in a bull market. Absolutely amazing on the daily chart. Any other time frame, any other instrument fails. That's fine. Great part of your portfolio. The strat. Who knows about the strat? Yeah. I've automated every strat entry condition. None of them work. Long term. Yeah. So any mechanical system out there, rule-based system, can be automated very easily. And if you've got a mechanical system, I'll automate it and I'll have it ready within half an hour. I've got tools that I can build EAs very, very quick to test strategies. I've never found one that works long-term and pass robustness testing. And the reason for that is a mechanical system will only work under a certain set of market conditions. it's a mean reversion system, it's a trend-based system, or it's a breakout system. There are only 3 types of system out there: mean reversion, trend, and breakout. Some instruments are really good for trend-based strategies. Look at Euro US dollar. Yeah. Do you want to be doing anything this year but taking trend-based entries? No. How do you think your trend-based strategy performed in there? So your P&L on your trend-based strategy will look like this. Might have in that, 2019 to 22, might have in that 3-year period got back to break even. Smash bar strategy looks exactly like that on the S&P 500. Why? Look at the S&P 500. Smash bar strategy absolutely killed it. Smash bar strategy absolutely tanking and blowing the account right now. There, kiss it goodbye, gone. Yeah. So the problem with mechanical strategies is they will only work in certain market conditions, which is why you have to adapt. You have to, as a trader, identify, which is exactly what I've done. I've switched my EA over to take trend-based opportunities on the stuff that's trending at the moment on the hourly 14 RSI extensions. Never used hourly 14 before because I had to reevaluate because stuff wasn't working. You have to change. So mechanical strategy is great. Stick it in a back test for 10 years, it will fail. Guaranteed, it will fail. Or like with the marketplace, and this is the problem with EAs on the marketplace, you find any EA on the marketplace and look at the back testing. Back testing will be from this period to this period, and it will show a lovely equity curve. Take that EA, put it on your chart on another period of time, and look at what the equity curve's like. It's all smoke and mirrors, and people don't test. They don't know how to back test, which is fine. Why would you? But you will learn it very fast when you've bought 5 EAs and they've all blown your accounts. You'll be thinking, well, how the hell does that work? Why is it not doing what it said on the tin? Because what it said on the tin was tested here. Where we are is here. Not going to work. That's the problem with mechanical strategies. They will work for a short period of time. And again, another way to pass a prop firm very easily. Find a mechanical strategy with a very high strike rate that you can get a drawdown of less than 5% on. You can pass a prop firm within a week. Don't expect that, though, to continue to make money for the year. You will probably have a few good withdrawals from it before it blows the account and you have to go back to square one. And then you might have to take 3 or 4 evaluations with that EA before it gets you a new funded account. And then you've got to hope you've got another good couple of weeks on that one to build it up to pay for the prop firm evaluations you lost. But I've built EAs which will pass prop firms. They will not last long, but they will work because the market conditions, when I develop it on the 5-minute chart, are going to continue maybe for a week or two. So it will work really well. But stick it on another instrument and it won't. So, you can, a stop hunt strategy is very easy to automate. But what is a stop hunt strategy? Where is the stop hunt? Is it there? 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 Your opinion on where you're looking for a stop hunt is going to be different to mine. So what do you tell the EA to do? Where do you tell it to stop hunt? What time frame? What's the look back? Where are you going to measure it from? How much has it got to have moved down for it to class that as actually a stop run? How far has it got to come back down before it's classed as a stop run? Do you need a fib on it to make sure it hasn't come down to the 50% before you start taking your short? There's 1,000 ways to trade a stop run. So EAs are only as good as what you program. And if you program rubbish, you're going to get rubbish back. But, you can automate absolutely anything. We've got loads of RSI extensions here today. Obviously, the pound is the main thing. The pound is coming down like an absolute house of cards today. Much to my disgust because I was short on it this morning. But yeah, so I wouldn't really look at me reversing these. But there you go, talking about stop runs, okay? Anybody that hit the buy button from Tuesday last week that has not exited their position is now liquidated. Is this a stop run? Or is that the stop run? Is there stops here? Yeah, we don't know. Nobody knows, do we? And this is why price moves. The banks will be looking for liquidity. If they can't find liquidity here to start the rally they want, they'll come and find it down here. So this stop run will fail. Doesn't matter. It's, the rules of when you hit these buttons don't make any difference whatsoever. If I hit the buy button now, I've got a 50-50 shot of making money or not. Yes, it's probably a good spot to hit the buy button. Might not be. I thought it was a good spot to hit the buy button in the Aussie New Zealand a couple of weeks ago. It wasn't. No. We just had a reverse alert on the hourly, by the way, on Aussie New Zealand, which we're just retesting. So we'll see if this holds. I'm not going to add any more to this because I want to get in the money before I start trying to scale in on that one. Stevie, my paid course is brilliant. I don't have a paid course anymore. It's all free now. It's all on YouTube. Oh, come on, let's find Greg. Come on, Greg, you got to be around. You got to be around here somewhere. We love you, Greg. Never going to find him. I don't think there's ads. I don't know where I've got ads, you see. So I don't know when the ads trigger. Oh, I thought that was him. It wasn't. It's the 10x marketing program guy. He's another one that comes up all the time. I don't even do marketing. I don't know why I get advertised to by this guy, but I thought that was Greg. Grant Cardone. Anyway, we're not going to find him, are we? I'm going to give up finding him. First time here, and you dropped so many gems in the stream, and I didn't hear you say one time drop a like. So I gave you one and a sub. Oh, that's good. Thank you, Terrell. Yeah, I'm not here to build a million people following to make money. I trade because I want to help people out, and it gives me accountability mainly. If you've got a load of people watching you or watching a replay of you trading, you don't make stupid mistakes. But yeah, I'm not looking to make a million quid out of YouTube. I'm certainly not going to do that because I get about 200 or 300 views a day. Even if I got 2 or 3. Do you know what? I have got monetization turned on YouTube. I might every month I make somewhere around about $50 to $60, $70. If I had 1,000 people a day, I'd probably make somewhere around $600. I've made $2,500 last night trading FOMC. I'm really not bothered about YouTube earnings at all. You've got to have like 1 million people following you to make money out of YouTube, haven't you? And there's not 1 million people interested in trading, I don't think, that would want to watch me. So, and most of the time I'm sitting there doing this because 90% of your time spent trading is watching contraction and this just doing nothing. So I'll have to waffle and fill, which is what I love doing. I love talking about trading. So I'm more than happy to carry on talking about trading because that's what I love doing. So you make lots of money scalping indices, so you make lots of money scalping indices than position trading, although I prefer position trading. Can't wait for this earnings to fade away. It's a real pain. Yeah. But I've only really been scalping in the last couple of months through necessity because the position trading, again, the position trading bootcamp teaches you how to position trade, and it teaches you how to position trade using the setups that I personally use, which is the RSI extension. You can position trade using any method you want. The position trading is a methodology. It's a way of entering the market and exiting the market. whether you use the RSI or the reversal alerts indicator or ADR or moving averages or whatever you use, it doesn't matter. Position trading is a style, a way of trading that doesn't use stops and uses very small position sizing. The reason I'm scalping a lot more and the reason I'm doing a lot more prop work at the moment is because it's harder to position trade at the moment than it has been, because the market conditions have changed. And this is what I said, earlier. You've got to adapt. My position trading earnings typically are 5 to 10% to 15% a month, normally, position trading. That started to drop and I started to get squeezed more. So I started scalping again. And I used to be a scalper. Very hit and miss. And I still am hit and miss. But the thing now is, with me being hit and miss as a scalper, is I don't have to worry about it because I'm not scalping with my money, am I? I'm scalping with other people's money. So whether I spend $1,000, $1,500, $2,000 on proper valuations and blow the lot, I don't care. I've lost $2,000. If I was scalping with my own 30k account and lost $2,000, I'd be pissed off. But what I can do is what I did yesterday with EA and get another $100,000 account tomorrow. And this morning I've made $2,500. Or over the last 24 hours, I made $2,500. So, I'm not doing it with my money. When I was scalping previously, I was scalping with my own account, and that makes you revenge trade a lot more when you've got your own money going down the pan. But that's why I've started, because look at my exposure at the minute. I haven't got any exposure on because I can't find any opportunities. Everything I want to get into on RSI at the moment on the 4 hour, Aussie, New Zealand, I'm already in it. Yen, I'm not interested in. 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 Pound US dollar, I'm not stepping in front of that steam train at the moment with the US dollar. Euro US dollar, I'm not stepping in front of that steam train at the moment with the Euro US dollar. It's going down. My bias on the euro is short. I'm looking for short entries. Yeah. So see what I mean? This is the problem. You'll get to a point with any system or strategy where it becomes more difficult to trade. And it's not because the system or strategy is failing. This is why people system hop. It's not working anymore, position trading. No, it is. The RSI is just not as effective as it was 6 months ago because market conditions have changed. We've entered a recession. You need to be a trend trader. So you switch yourself into a trend trading mentality, which is what I'm doing. I'm just not finding any entries based on trend at the moment either. So you can see Aussie US. There's one, but I missed it. And the reason I missed it was because I wasn't going to enter a position on FOMC. Too much risk. But I missed it. But next time that pulls back, I'll jump in. Yeah. So, you just got to bide your time, and some months you just won't be able to make the money you want. And this is the problem with trading. It's not a career where you get paid a salary. I earn a yearly amount of money, and that's it. I run a 30k account, and if I can make 10% a month, I'm earning 35 grand a year. That pays all my bills. That's it. I earn more than that because I do more out of scalping. I've got my investment account, which I run, which is not running at the moment either. That's not running. Hasn't been running all year. S&P 500. I've told you about this before. I run my own investment account on S&P 500. I had to stop there because we entered a bear market. I'm not running it on this. Look at this. Look at the S&P. Look at normal price action on the S&P. It's like that. Yeah. Look at the days. Look at this. You cannot run an investment account or a pension account on something that's that volatile and nuts. This will return. And when it returns, I will start making money out of that as well. But at the moment, it's not possible. So you have to shift. You should have 100,000 followers just off the last 10 minutes. Well, go and tell everybody about me. There's plenty of videos. I'm not short of content. There's my normal videos. There's my live rooms. Oh, right, just not short of a few few vids. Christ, when did I start doing the live room on YouTube? back then. When was that? February 22. God, so I've only been doing it on here. Oh no, sorry. No. I was going to say I've been doing it longer than that. December 21. There we go. So a year. Nearly. But obviously I was running the live room before that, wasn't I? Which I had a paid live room, which was 50 quid a month. So a bit different. Let's just see what that's up to. Right, I'm stuck in this DAX short, which I can't get out of at the minute. So I've been also getting ads for people to pass your funded challenge for you. Be very careful with those. Funded accounts are the new craze. Yeah. So anybody that says they will pass your funded account, run a mile. And it should be blatantly obvious why you shouldn't be doing it. Forget the fact it's against terms of service of all prop firms. Yeah. You're not allowed to follow signals. You're not allowed to have somebody else pass your account for you. How they'll find out, I don't know. But what these guys are doing, and I've been in contact with a couple of these, is they're selling you an EA. And this EA is set up to over leverage and scalp. And it does get you through prop firm accounts. It won't last more than a couple of weeks. And it'll blow it. You'll be lucky if you make money out of it. Very lucky. You'll be lucky if it passes, to be honest. But second thing, which is the obvious one, is if you can't pass a prop firm evaluation yourself, how the hell are you going to trade it? If I give you one of my 100K accounts now, you're going to blow it. Not being horrible, but you are. You're going to blow it because you can't trade. You can't pass a prop firm account. If you could, you'd pass one, wouldn't you? So if you can't pass a prop firm account, don't pay someone else to pass it for you. Learn to trade and pass it yourself. Otherwise, what's the bloody point in having it? Sorry to be harsh, but that's the truth, isn't it? People constantly contact me. Can you run a signal service so I can follow your trades? Can you pass a valuation for me? Do you do account management? No. What happens if I get run over by a bus tomorrow? Let's say, for example, you rely on me to pay your mortgage and I get run over by a bus tomorrow. You're going to lose your house. It's not a good business model, is it? If you can't pass a prop evaluation, don't do it. Don't get someone else to do it for you. Come here, buy the cheapest possible one you can get, right? And take a 0.25% position size in that on every trade you take and trade it for up to 30 days and see if you can end that 30 days in profit. If you can, you've got half a chance. Consistently profitable. That's the way you make money. No one can be consistently profitable for an entire month in, month out. You'll blow it. I've blown it. I can't be consistently profitable for an entire month scalping. I can't do it because the market won't let me. The market will do stuff like this and it will catch you out. And every time you go and take that one, it will pop. And every time you take a break out of the low, it will pop. Every time you take that bounce, it will pull back a little bit and it will drop. And you will have 3 days on the trot where that will go wrong and that will be it. You'll be blown and you've got to start again. And you've got to psychologically manage that as well as then do a new evaluation and pass again. I would have to say on difficulty of jobs, this is up there with fighter pilot. People see people driving Lamborghinis and think it's easy. This is the hardest job there is. Providing for your family out of a completely random candlestick chart. And it is completely random. Show me where there's no chaos there. I haven't got a clue if this next candle's going that way or that way. Nobody has. Try making money out of something that's completely random and chaotic. Not easy, is it? Very, very difficult job. People want to do it because they see a load of people driving around making a load of money. I've just told you that's not going to happen, is it? 10% a year. If you've got 100 grand in savings, you could make 10 grand a month. If you haven't got 100 grand in savings, you're not going to make that sort of money. And if you can make 100 grand a month, that's still not going to buy you a Lamborghini. I should know. I haven't got one. I've got a Porsche, but I haven't got a Lamborghini. And it's not a new Porsche, it's an old one. Because I can't afford a new one. If I could, I certainly wouldn't be sitting here doing this. I probably would still, because it keeps me sane. What do you want to see? Discretionary trading is the way to go. All trading is discretionary, Mohammed, isn't it? When you think about it, discretionary trading is basically you either follow a mechanical system or you're discretionary. So I follow a mechanical system when I position trade. A mechanical system relies on a condition in the market being present, followed by a signal telling me to enter a trade. So that's a mechanical system. There's nothing discretionary about that. RSI, it's logic. RSI equals extended. Reversal alert indicator equals signal. Enter short. That's mechanical. Discretionary was selling here, thinking I'm going to get a breakout, not getting a breakout, taking another trade there because it looked like we were just starting to reject, and we didn't. That was my discretion. There's nothing mechanical about that. I spotted 3 wicks to the upside and thought it looked like the sellers were taking control and we were going to get a market structure shift to the downside. We didn't. It shifted up and then went into accumulation. That's discretionary. There's nothing good or bad about either. They're just different ways of entering the market. The market will go that way, and move through time. Whether you take a discretionary entry on a 5 minute or you take a mechanical entry on a 5 minute, or discretionary on a daily or mechanical on a daily, has nothing to do with anything. This is going to move through time. It's going to paint a new candle every day, and the candles are going to be drawn up or down. There's only 3 types of candles on any chart. And this is from the strat, if you know the strat. And this is where I like his logic. A candle can either be, let's say we got a candle there. A candle can either be an inside bar, an outside bar, or it can be a higher high. This is our initial candle. Higher high, higher low. Or it can be a lower low, lower high. Yeah, there's only 3 types of candle. Inside bar, outside bar, bar up, or bar down. Those are the only constants in the market, and time. How you use this information with either discretion or with mechanics has got nothing to do with how you make money. It's just totally random. Where this is going, if I knew yesterday we were going to have a massive down day, do you not think I would have just shorted the lows? No one knows, do they? How you make money is identifying your right, if you're a discretionary trader, and adding to the position to make a bigger win when you get that win, and making sure that your losses are smaller than your wins. And that, again, is something which is completely discretionary. There is a million mechanical ways that I can do that. Every mechanical way I've tested in every EA I've ever developed has never, ever found a consistent way of working. Trailing stops work sometimes, don't work others. 2-to-1 risk-reward ratios work sometimes, don't work others. Yeah, moving stops to break even work. They just don't work. Don't do that. There's loads and loads and loads of ways that you can trail. You can trail on candle stop. You can trail on tick. They all will have, sometimes they work and sometimes they won't. It's totally random as to whether or not the market goes in your direction or not. Yeah. Look at the good old bullish engulfing. Yeah. This indicator, this price action toolkit here, draws bearish engulfings. There's a bearish engulfing. Yeah. Did it work? Did it hell? Yeah. Look at this bearish engulfing, bullish engulfing here. And this bullish engulfing here. And this bullish engulfing here. Did that work? You tell me. If you took a long because you got a bullish engulfing, did you get out there, or did you move to break even and get stopped out for nothing and then see the market fly away with you? That bullish engulfing worked. Only worked if you got out here and you weren't shooting for the moon, because at the moment it's on its way back. Don't know if it worked or not. Again, you see what I mean? It's this one failed. If you got in there you're stopped out. Not even the good old bullish engulfing works. Everything is random. I've created EAs to trade all of this with every single money management strategy, risk strategy under the sun that I've ever heard of. Everything, martingale, the lot. I've tested everything. Nothing works. Honestly, nothing works. If you've got something that works, let me have it and I'll put it in an EA and I'll show you how it fails. And the reason it fails is because the market conditions change and you have to change, which is why you cannot set an EA and go and sit on a beach and drink Mai Tais, because this is completely never happened before. Never happened before. How could you possibly build a strategy or a system to trade the size of this volatility compared to the normal size of volatility in the opposite direction to the normal direction? No system or strategy that's ever been developed for the S&P 500 in the past is working now. Just not working. And it doesn't matter how many parameters you change, you won't find one. Sorry to break it to you, but that's real world. Not being very good. I'm not really promoting trading as a career, am I? Right, I'm waffling on this morning. It's good fun to waffle on, though. I like it when the market's quiet like this. I've got nothing else to do. I also considered that all systems are delusion and only good risk managers make money. Yes, exactly. There you go. I've just read your comment after I've just said exactly what you've just said. Risk management. That is exactly right. The reason I make money as a scalper is not because I'm right. And I'm going to promote Tom Hugard again here. He's got a book out called Best Loser Wins. And it's on my birthday list, and I shall be getting it next, couple of weeks. That's my birthday. And that one statement, best loser wins, is how you make money in the markets. When especially scalping, position trading is different. It's more of an investment swing style strategy. But when you're scalping like this, it's all about making money. So if you want to make money, $500 a day or something, if you take one trade, one opening range breakout trade in the morning, for example, let's say this was our opening range. We took this opening range breakout short. We got down to here. We risked 1% of our account there, and we made 2% of our account there. And basically, we risked $250. We made 500. When you get to there, turn it off, walk away, you're done. That's how you make money. If you took a trade like I did this morning and you're 0.5% down, all it means is you've got to work longer today to get to your target. Yeah, my target on my futures account is $600 a day. Some days I'm literally, yesterday I made $840 at the New York Open on futures. I shut the platform within 10 minutes and I was done. Other days I've sat there and I've battled with that thing and lost $1,000 by the end of the session, and I've worked 4 hours to lose $1,000. But it's how you lose which makes you more money. Yeah. So when you identify that you're wrong, at the moment I'm not wrong and I'm not right. That's when I'll be wrong. When I'm right, I will add more to this to make sure that I'm right with more size to make more money. That's the only thing that works that I have found in scalping, is adding to your positions when they are working. Yeah. When stuff's going your way, add to it. The trade I took on the I got the chart. There we go. The trade I took on the pound US dollar here. Yeah, the reason this was a profitable trade here. Look at the first entry. Yeah. I had no idea if it was going to work. It did. It started working. What did I do? I added more. And then I got out there. So I made twice as much money on that little move than I would have if I hadn't have done that. If it had gone up, I lose one position. If it goes my way, I make 2, 3, 4 positions. However many I want to scale in. Depends how the market structure goes and how it trades. But you try teaching an EA to do this. You can't. An EA will just go, if X moves Y, do this. If it does that, get out here. Whereas I would be looking at this whole thing and going, this is an accumulation before the next break. I didn't in this case because why? Why did I not? Why did I not let that run? Because my job is to make $500, and I did. Sorry, not on that one. As a DAX, on that one. Yeah, that's my job, is to make $500. That's roughly $500. So that's what you do. You trade until you don't need to trade anymore, and then you stop. An EA, again, can't be taught to do that. You can tell it to stop trading at a certain point of the day, but you've also got to then tell it to stop trading at a certain point when it loses in a day as well. I have, and this is why I like prop accounts, I've got a limit I can lose a day, which is 2.5 grand. I can't lose more than 2.5 grand a day. So if I hit 2 grand loss, I stop trading. I have to. Otherwise, I've got a chance I'm going to blow that $100,000 these companies just happily given me. But for position trading, it's a completely different thing, obviously, and that's all covered in the bootcamp. If all retailers need to have a license to trade the same way you need a driver's license, which requires proper training and certification from a real trader, is this bad for the industry or good? I don't know. Never been asked that one before. It will certainly kill the industry if you needed a license to trade. Well, we know what the answer to that question is, don't we? We know that roughly 95 to 98% of people that now trade won't be allowed to anymore. Because I presume to pass your driver's license or your trader's license in this case, you've got to be able to prove that you can trade. I might not even get a license. Depends when they're testing it, doesn't it? If they're testing me on a good week, I'll pass. If they're testing me on a bad week, I'll fail. I might have to take my license a few times. I don't know. I don't know when I'm going to have a good one or a bad one. Do I? It's not down to me. It's down to the market. So it's a little bit different to a driving test, isn't it? And the only way you really fail a driving test is if you screw up. If there's a hoon comes down the road and smashes into your car, that's not your fault. But think about that in a trading perspective. If I'm in a trade and the market decides to dump 5 times every time I go long, whose fault is that? Is it mine or is it the market's? Just because I hit the button the wrong way 5 times, does it mean I'm a bad trader? No, it just means the market was against me that day, week, month, year, whatever it was. But it would certainly stop me getting a license, wouldn't it? It's an interesting concept. It would certainly kill the brokers would all go bust, wouldn't they? If you needed a license to trade, you'd be in all sorts of trouble. Back into profit on the DAX. I'm just going to put another sell stop below the lows. So if we are going to get the breakout, I presume the US dollar's just started to power back up again after a pullback. Yeah, so US dollar's powering up. So we got some strength coming through to the downside on the indices. So I'm going to try and add one down here and try and get a breakout to the downside. But yeah, clear. Order flow, everything is going short after FOMC. The markets didn't like that. No, everything's not going short. The dollar is powering up. Depends what you're looking at. The pound is dropping because we've got the rate announcement today. Whoops. That's because the rates are being announced today, not because of the US dollar, because of FOMC. That's everybody jumping ship ahead of the rates at midday. But yeah, I mean, the US dollar is obviously going long, which is pushing everything short against the US dollar, obviously. What do I need? Let's just quickly look at what oil's up to. So oil, we just got the reversal on oil. Again, looking at your, when you're talking about stop runs and, building an EA to automate stop runs, when you see something like this, in a previous area of balance, yeah, if this is going to pop from here, hasn't done the liquidity run, but it's still a good trade, yeah, because this is an area of rejection previously. So, that wouldn't work. Trying to program this, and this is what I say, this is the discretionary part of trading. Do you go long now? If you're a discretionary trader, yeah, probably nice reversal alert to take. If you're a mechanical trader, you need a rule in place to take out yesterday's low, for example. You won't take a long there. Difference again between mechanical and discretionary. Discretionary, that's a good long. I like it as a long. Why? Because it's also a Fibonacci retracement. And as much as I, don't think you can make a living out of fibs, they are a very, very good confluence. This is a deep pullback off of a 61.8 to 72 retracement. And again, it's not going to hit it to the pip, never does. It's an area where we're pulling back into. Why? Because we had an accumulation break, which is a propulsion gap, where buyers have started to sit in. Previous area of balance, we pushed out of. The buyers that caused that move are adding. Again, you can't teach EAs to do this stuff. It's just not programmable. It is programmable, but it's so complicated. It's just not even worth bothering. Just taking second short DAX. Oh, I have on the funded account. I haven't on this one yet. Haven't quite got the break yet. But on the funded account, I have just gone in short on the second position. So I'm going to watch this second position like a hawk, because I don't want to double bottom here and take a 1% loss. Oops. 10:30. So we've got another 30 minutes before the hour's up. So this is obviously a load of limit orders triggering. Yeah, anybody that's assuming that we are in a rotation today is going to be buying the lows, buying the low of the day, trading up to the high. So we need to see if there's enough selling pressure to break through these lows. What's the US indices up to? So we've got new lows on the NASDAQ, new lows on the S&P, new lows on the Dow. DAX is running behind. So we have managed to break out the lows on these. So there's a good chance the DAX will follow. We'll see. Watch that for a bit. I think the Dixie will tank the bed next week, most probably looking into the spike. Yeah, could do. Find Greg. Find Greg. Greg. Oh, that's not Greg. That's Urban Jungle. Don't know who they are. No. Never going to find him, am I? It's one of those things, isn't it? Like every single day, Greg Secker comes up on my Facebook, on my YouTube, every day. He's there. He's an ad every single day. The one day I go through video after video, he doesn't appear. Who's this guy? Somebody else doing a live stream. Just seeing if I can get someone else's adverts to trigger, because there's Tom Hugard. Go and check Tom out. He's awesome. He hasn't got ads running on his stuff. There he is again. Nah, I'm not going to find him, am I? It's not going to happen. Not going to happen. No, we're not going to find him. I'm sad. You watch. As soon as I leave this, he's going to appear. He's going to come on, isn't he? The next video I watch, I can guarantee it. He'll come up. Maybe he's gone bankrupt and run out of money. Can't advertise anymore. Wouldn't that be lovely? Right, so we're just pulling off the lows. I didn't manage to get it triggered on this account. It is triggered on the funded, and I'm roughly at break even. So any kind of inside bar, my break even level on the funded is here. So if we get any kind of bullish engulfing, I'll be watching the next candle, and maybe take a loss. Try this guy, WB Trading. Never heard of him. Have I heard of him? Yeah, I don't know. Mechanical rules video. See, look, I mean, pound US dollar, 1,000 banked in 6 minutes. Piss off. I did 2.5 grand yesterday on FOMC. I'm not bragging about it. I just did. Because it was luck. I can make that no problem. And I can do it in 10 seconds. Do you know why? Because I can just go 50 lots short. And if it ticks down by 3 ticks, I'm out. Am I a good trader? Am I hell? Selling a course. Booking a call to sell you a course. Yeah. Where's his live stream? Where's a video of him trading live? Doing it in the real world. He's an affiliate for FTMO. Yeah, these guys aren't just making money out of the web. They're making money out of people that want to do it. It's not. I don't know. Might be good, might be bad. Come on, Greg. Come on, Greg. No. I've given up. He's not coming today. Sorry. Just reattempting the lows. The other ad is spamming. Ad spammer is G7FX. Yeah, Nirav. I've done Nirav's course. X Bartley's footprint trader. Yeah, his course is very good. Good luck executing it if you're not a banker. You need Sierra charts. You need all sorts of stuff, and it's very hard work. There's a lot better ways. There's a lot easier ways to make money. Footprint is hard. If you've traded everything, surely you've traded footprint chart and volume profile. Yep, I trade them. I trade them daily. Let me launch my jigsaw. I'm going to do some futures trading this afternoon. Here comes jigsaw. So yeah, I trade futures. Let's wait for the data to load. I trade footprint. I don't trade footprint charts. I trade market profile. But yeah, I mean, I can trade footprints. Oh, not the slanty ones. They're horrible. But, you know, and this is what he teaches, footprint charts, and, you know, combining footprints together, Yeah, it's all great. It's all great theory. Yeah, it's all great theory. But right now, yeah, we're in. Oh, you can't see it, can you? Unexpected issues subscribing to ES. But yeah, I mean, look at this here. So this is your value area. We're at value area low at the moment. This is value area. So yeah, this footprint chart and this market profile here. Which way is it going next? Yeah, this doesn't tell you anything, right? What he will teach you, G7FX, will teach you to combine these together and make a volume profile chart, which we can do as well. Footprints. Oh, where's volume profile gone? Sure, I have volume profile in it. Market profile. There we go. Yeah, so there's market profile. So this is what he teaches, market profile. And basically, the basic concept is you want to look for these nodes. When we get to these nodes, they act as support and resistance. Yeah. Go and look at a candlestick chart, and what you'll find is, funnily enough, support and resistance. So this is where we traded down to. We broke through it. We traded back up into it. Yeah. So what he's saying is trade back into support or resistance and then take a trade. Why do I need this incredibly complex $1,000 course to teach me, in effect, what support and resistance is? Yeah. I'm not being horrible to Nirav, but he is just a support and resistance trader with an incredibly complex and expensive system. Seriously, that is it. I'm not going to trade any futures today. Let me just shut that platform down. One sec. But yeah, that's basically what it is in a nutshell. Which is fine, but it's really hard work. Really hard work. There's a lot involved in it, and you know what I just showed you on the screen there. What did I show you? Was that was in the middle charts, wasn't it? Which is NASDAQ. So volume profile that I just showed you for yesterday, right? Previous volume profile was this. Then we had a volume profile that looked like that. Then we had a volume profile that looked like that, right? So if we get up into that area, we should be selling, shouldn't we? What's all this? Resistance. It's the same thing. It's just another way of showing you the same thing. Everything on the internet, every course you take is exactly the same. Support, resistance. Market moves up and down from support to resistance, and it bounces. That's what it does. That's what it's always done. That's what it's always going to do. Moves up, and this is what I keep saying over and over again, my little mantra. Moves up, moves down through time. That's it. How you make money out of that, up to you. By hitting buttons. Yeah. Did I know this was going short? No, it's going short. Brilliant. I am now $900 in profit. Thank you very much. $3,300. Did I know that was going to happen? No, I haven't got a clue. But I take it, and I'm done for the day. That's how you make money. Horrible, isn't it? But that is real. That's it doesn't matter how many of these courses you do, none of them are going to teach you how to make money out of the markets. G7, oh my God, he's so annoying. Yeah. I don't find him annoying. I find he's a very interesting guy. I think he's an ex-banker. He's got a way of training, but it's the same as me. Go and watch my course in position trading. That's how I make money. You might find me annoying. A lot of people probably look at my course and go, what an idiot. He doesn't use a stop. Loony. Absolute loony. And I've been called a loony many times. But what people don't realize is I'm not risking 2.5% of my account without a stop. I'm risking 0.25% of my account if it moves half an ADR to an ADR away from my initial position. I might be in 0.5% of drawdown. People don't get the concept of position trading. That's why they think it's stupid not using a stop. Tom Hugard says you should never, ever, ever take a trade without a stop. I 100% agree with him. Am I taking trades without stops now? No. Would I ever take a scalp without a stop? No. Would I take a position trade without a stop? 100% yes, because it's not a scalp. It could move against me to ADR, and the worst position I'll be in is 1% of drawdown. Yeah. If you have 3 trades go against you when you're scalping with 1% risk, you've lost 3% of your account. There's a massive, massive difference between being in drawdown by 1% with a chance of getting it back and losing 3% because you've been stopped out. Why do you think they hunt stops? Easy money, isn't it, for a bank? The bank knows exactly where my stop is. Exactly where it is. It knows my stop's there because why? Everybody puts it there. Even the banks put them there. The banks put limit orders here to trigger. Of course they know where it is. They're putting them there. Why does it move to support and resistance? Because that's where the money is. It's not smart money. It's just the way the market works. And Nirav is really good at explaining market concept. That's one thing I will give him out of that course. It's a brilliant course for explaining market concept. If you want to know how a market works, brilliant. But it's going to cost you £1,000. And I can tell you how a market works. It's in my bootcamp. Go and watch that. It's free. It's on YouTube. If you ever tried, someone read that. WB Trading do live sessions for players, for payers only. He's using 5 mechanical strategies. All of them are making 50% win rate. Cost £2,000 for the package. Do not let members to communicate with each other. Well, fair enough. If he's making money and he's proving it every day, fair play. It's good. There's nothing wrong with mechanical strategies. They do work for a period of time. But how long, I would question, how long has WB Trading been around? And how much track record has he got with those strategies, mechanical strategies? If they're mechanical, if you want to give Mohammed, if you've done his course and you know his strategies, ping them over to me. I'll build an EA and we'll backtest them. And I'll show you how effective they are over 15 years. Because if he's been around for 12 months trading those mechanical strategies and they're doing really well, that's brilliant. When we suddenly come out of recession and the S&P starts flying again and market volatility drops to 50%, we'll see if they work. And I can do that because I know exactly where all those time periods are. Market condition is massively important. So yeah, I'd be more than happy to look at any strategy. Like I say, any mechanical strategy, I will happily automate it. Because I'd love to find some that work long term. It would be lovely. But I was just saying, for 14 years, I haven't found one. I wish. God, it's going on a long time this morning, isn't it? 11 o'clock. It's nearly lunchtime. Have you heard of Boocamp? Yeah, I've got Boocamp. It's software to see limit orders. Yeah, I've got Boocamp. Again, I bought Boocamp and I trade with Jigsaw, which I've just shown you. Jigsaw is better than Boocamp. Boocamp copied Jigsaw. Jigsaw was the first with heat map order flow. I use Jigsaw because I've tried both and I prefer Jigsaw. But heat maps are great for seeing market orders, but as you've just pointed out, majority of it is spoofed. And the spoofing happens at support and resistance, which is why you get failed support and resistance. So I don't actually use the heat map part of it anymore. I did start using it a lot, but I don't use the heat map part anymore. I just use normal charts again now. You flip between things. I've tried everything. I've tried footprints. I've tried market profile. I've tried everything. I've tried time and sales. I've tried all sorts. But the thing that is key with any kind of futures trading, if you're using that sort of software, is order flow and momentum, which is why Tick Strike, I think, is the best $99 you'll ever spend. Tick Strike tells you when, and this isn't going to do anything today because there's no volatility today, but Tick Strike tells you when Oh, you can hear it. Oh no, tick strike is working. There you go. Buyers, buyers, more buyers, more buyers. What's the S&P doing right now? Going up. Because there's buyers. There's more buyers. More buyers. Going up. More buyers. More buyers. More buyers. More buyers. Brilliant. Tick strike. Tells you exactly what's happening on your chart. Yeah. But the thing with tick strike is not the fact that it's ticking up now and we should be buying. What tick strike is good at is telling you which way the market is going. Subconsciously, when you have tick strike on in the back of your head, you are hearing more down crickets or up crickets. At the moment, I'm hearing up crickets, but I know the market's going down. So what am I listening for now? Yeah, I'm listening for the upticks to stop, and I'm listening for downticks to start creeping in. What does that tell me? Sellers are carrying on with the trend. So I'm ignoring these upticks because the market's coming down. So I'm waiting for tick strike to tell me shorts are starting, and I'm getting on board with their momentum. There's so many tools out there, and there's so many ways to use them. You will literally get lost. And this is why people do get lost in this industry, isn't it? Hop. Tick strike's telling me if I'm short on the S&P right now, I need to be getting out. I'm short on the DAX, and I should be getting out. But I'll wait and hear what happens next. If the market is a 50-50 chance, a 95% retail loss rate doesn't seem to match up. It does feel that the 5% knows something else. Is the heat map useless if it's constantly spoofed? No, it's not useless. It's really good for spotting iceberg orders, which are large orders that get put in the market. So an iceberg order is where an institution has to dump 10,000 contracts short. They will split that into 100 orders. Is that right? What's 100 times 100? 10,000. Yeah, I can't do the math today. Been talking too long. So what you'll see is the market will get to a point and bounce. Then it will get there again and bounce. It will get there again and bounce. It will get there again and bounce. And that is an iceberg order being executed at a price point. You need to be getting in short there. That is what it's really good for. Heat map software shows you iceberg orders in the fact that you'll get a block, a space, a block, a space, a block, a space. And that's an iceberg execution. The ones that get ripped away, the spoofs, yeah, they make it useless. But yeah, the 50-50 chance, right? Think about what you just said, cash flow, right? The 50-50 chance. If the market has a 50-50 chance, why do 95% of people lose? 95% of people lose because of fear and greed. Yeah. When I hit this button, let's do it. Right, I've got a 50-50 chance of it working. Yeah? Haven't I? Agreed. It can only go from here, up or down. Okay, I have decided to go short because we're trending down. That's why I've decided to go short. That's my reasoning. Is it the best place to take a trade? Probably not. Maybe. It's a resistance bounce. We'll see. Right, so what it's doing now, I was hoping it was going to move a bit faster than this, but it's not. That's why I'm on the 1 minute chart. It's not moving anywhere. But the reason this 50-50 shot is going to cause 95% of people to fail is because of that. Okay, something more like that. Yeah. So that is a 25 pip stop and a 44 pip target. Let's move that down. That is a 2-to-1 risk reward. Okay. If this pushes up, takes me out, I am one of the 95%. After it's pushed up and taken me out and it drops down to there, I am still one of the 95%. I was correct. in my assumption that the market would go down. So my 50-50 shot was right. The reason I am one of the 95% is because I used a stop loss, which got taken out before my trade could actually play out in my favor, because I used a 2-to-1 risk reward. If I use a 1-to-1 risk reward, the 50-50 shot is a proper 50-50 shot, because it's either going to move up 25 pips or down 25 pips. There's a 50-50 chance from where I've got in. What I do when I move to a 2-to-1 risk reward is I reduce my odds of a 50-50 dramatically down. There's way more chance of it doing 25 pips up than there is of doing it 50 down. It's got to move twice as far for my trade to work. That's why 95% of people fail. Remove that from the equation. Oh, I closed it. Sorry. Remove the stop from the equation and leave the TP in place. My odds are now much bigger, because if this thing does this for a day and then comes back down and hits that, I am now part of the 5%. Yeah, that's why 95% of traders fail, because they put an order in the market to tell the market to take their money out of their pocket. Look at your broker contract that you signed with your broker. It states, and I'm not joking, in your terms and conditions somewhere, it will state that they have the right to execute your order at any price they deem fit that is achievable by them. So if you enter your stop here, they can widen the spread to take your order out, and price will not have moved from that position. You signed a contract to allow them to do that. And if you moan at them, they will say, well, yeah, spread widened there because of slippage. Prove it. Yeah. So even if you have a stop up here and the market moves up to there and starts to bounce, they can still stop you out. Doesn't matter. The reason you're losing is because of the stop. End of story. That is it. That's what makes people that's what makes the 95%. And the 2-to-1 risk reward, the 1-to-5 risk reward, the 5-to-1 risk reward. The problem with a risk reward is, can the market achieve it? If I want to get a 10-to-1 out of this, let's go 50 pips. So if I want a 10-to-1 out of this, I've got to go 500, right? We're still ticking up. What's the chances of me hitting that down near ADR, knowing for full well that more than 60% of the day will be spent within that range? Never going to get there. There's only a 42% chance of it actually getting to ADR. My odds are massively against me. So either you need to be like me here, going like you just saw me made $900, right? Live on stream, just there on my funded account. I just made $900 a minute ago. Yeah. Why did I make $900? Because I bloody took it. Did I have a stop? Did I take a trade here with a stop here? No. I took a trade with a stop all the way up there because I need to give this room to breathe. And if it pushes up, I'll get out. You know, if it gives me a reason to get out, I'll get out. But this is why everybody loses, because you're not giving yourself a chance. Yeah, I'm now in profit on this. Am I a winner or a loser right now? Look at my P&L. What's the trade? At the moment, I'm a loser by 1p. If this moves down to here and I close this out, I'm part of the 5%, aren't I? If I close it here, I'm a winner. If I close it here, I'm a loser. But when you enter that trade, if you have a 1-to-1 risk reward ratio, it's a 50-50 shot. It's either going to go up or down. As you move your TP away, your odds go down, and that's why everybody loses, because it's got way. Look at how the market moves. Look at today. I mean, today is an absolute prime example on the DAX. Yeah, it doesn't. Right, there's your range. There's your opening range low. There's your opening range high. There's the high second opening range high, which is a 15-minute opening range high. So there's your 15-minute range. Every single trade you've taken today in here is stopped out. If you didn't have a stop above that or below that, they're all stopped out. Everybody that went short there had a stop, I don't know, here above that candle. He stopped out. Yeah. He went long there, got stopped out. Yeah. You know, most people in this range now, they're all dead. Right, there's a negative ticket. So we're ticking down now. So my S&P trade, I can tell you right now, my S&P trade is in profit. Ta-da! How do I know that? Tick strike. That's why you use tick strike on futures. Momentum, market momentum. This is where I want to be getting in short. Why? Because the market's coming down. I'm hearing sellers entering the market. I've been hearing sellers all morning. If you've been listening to tick strike all morning, your brain from that point onwards would be hearing, I'm waiting for these negative ticks to come in, because that's every time there's negative ticks coming, we push down hard. Tick strike's brilliant. $99. It's just the best thing you'll ever have. For trend trading, tick strike in here, useless. Doesn't do anything. Just chops you around. But there you go, look. I'll stay in this because we're ticking down. If I hear some upticks coming in, I'll shut it. Anyway, I like waffling on like this. Mohammed, I did get his course. I will reach you. I'm on Telegram, so come into Telegram if you want to show me the strategies. To be honest, I'm not saying it's 50% win rate. It's just a coin flip strategy, and I do not like this. I found my edge and consistency using the reversal indicator. Hey, market structure. That is the one thing, market structure, that is consistent, and this is why I built this indicator. This is consistent across every single instrument and time frame there is tradable, because you are trading a market. And a market has structure, it has buyers and sellers. So when you get a break in structure, yeah, this is the momentum, the change of momentum. That's why this indicator works so well. It doesn't work on its own. If you took every trade, it's going to fail. It's not going to win every time. Obviously, nothing does. But structure is the same on everything. And that's what I was looking for, consistency. Like I said, every mechanical strategy will work for a period of time, or it will work on a time frame, or it will work on an instrument, or it will work on a combination of those three. But no mechanical strategy will work across multiple instruments and multiple time frames. The only thing that is consistent is price movement. And the way that price moves, it has a structure. It moves in waves. We know, fact. We know it. We can see it. We see it here, look. It moves in waves, high, low, lower high, lower low, lower high, lower low, lower high, lower low. What are we expecting? A lower high. Where do you want to sell it? There. Any time frame. You pick any time frame. Market structure break. Market structure break again. You know, but consistent across time frames. Look at any instrument. Market structure. It's everywhere. Ignore the spike. Yeah. Doesn't matter what you use, what you pick, that indicator works on everything. How can you get tick strike? Just go buy it. Go to financialjuice.com, click on tick strike here. Just go to tick strike, tickstrike.com. Do a 7-day free trial. Don't expect it to, you know, it's not a signal indicator. It's a market condition indicator. You can't use it to enter trades. What you use it for is, in the back of my head, I'm hearing nothing but down ticks all day long. I hear a few upticks every now and again, but then they're replaced by down ticks. Then I hear a few upticks every now and again. Then there's way more down ticks than there is upticks. What does that tell you? Sellers are in control. What do I want to be doing? Never, ever want to be hitting that button when the sellers are in control. That's how tick strike helps. And it really helps in futures market. Because futures, you're trading the ladder and you're trading ticks. So you want to know, you want to jump on board with momentum. That little 1 minute rally there. Yeah, this in the futures market here would have made me around about $200 to $300. Yeah, tick strike would have made me that. I wouldn't have taken that though. What I would have taken is this, because this is when the negative tick started up here. That candle here was where the tick strike started ticking down. Yeah. But in the futures market, we're not trading time charts. We're trading, well, I'm trading volume profile and I'm trading tick movement and momentum. It's a totally different thing to price action. Order flow, totally different. You are very real and honest, quite refreshing. Thank you, Trev. When you've been sold so much bullshit, you end up not wanting to carry on selling it. I've only improved my consistency when I did one-to-one risk reward. Trading education is so backwards. The worst advice goes viral. Everything goes viral on trading. So I can make an indicator tomorrow that looks like it's so amazing, and I can make an EA that will make an absolute fortune, but it's just not going to work. Market structure, relative strength. This is why I have what I have. This is why I trade the way I trade. Market structure works. Relative strength works because the market structure works. So when you have relative strength in one direction, we know that people who have won that trade have got to take a profit. Therefore, when we get that extension, we know that most of the time we get that reversal or pullback. Market structure. So we take a shift in structure to the downside and we take our profits. This is why I use this, and this is why I use that, in line ideally with a trend. And I know that this is something that works because price statistically stays within that range 42% of the time. When it breaks out, it doesn't go much further. So this is where we want to take our profits if we get there, or if we want to mean revert it, this is where we can get into a position. These are the only things I have found in 14 years that actually make logical sense with how the market works, if you think about it. Yeah, a market is where this guy over here wants to buy an apple, and this guy over here has got an apple for sale. If he wants $1 for his apple and this guy wants to pay 50p, the transaction won't happen. So this guy's either got to drop his price to 50p, or this guy's got to up his price to £1. What's this? Price. Who are all this? Market participants. This bloke and this bloke. What is this? The buyers paying more, the sellers dropping their prices. The buyers paying more, the sellers dropping their prices. And all the way through this, people are making money. When they make money, they have to get out of their positions. Yeah, I'm short at the moment. Down here, I was in 0.1%. I could have taken that off. In which case, then I become part of this down candle. This is obviously a different chart, I know that. But if this was the DAX, I'd be part of a down candle. Because this is a down candle. Yeah, so I would be part of the participants in here that were the sellers. That's it. Simple. Far to overcome. And every piece of education will teach you the same thing in a completely roundabout different way. That's true. I've been stopped out when I was genuinely nowhere near the stop. Yeah, that happens all the time. Don't stop runs beyond lows and highs negate a market structure system? Yes, they do. But if you think about it, right, so this reversal alert here on the hourly, in there is a stop hunt. You can't see it, but on M5, there is a liquidity run there. If you drop down to M5 on Tuesday, you'll see the liquidity run, which is why you need to use multi-time frame analysis. And again, there's a whole section of the bootcamp dedicated to multi-time frame analysis, which is why I'm watching H4 and taking trades on M15 and M5. So if you look at Tuesday, there's a liquidity run. Yeah, that is your reversal alert. There's your break in structure. Everyone went short there. Sellers are coming in. Yeah, there's a liquidity run there. On an hourly time frame, you could say that whole thing is a liquidity run, couldn't you? Although it gaps. This is a bad example because it's an index, it gaps. So, but yeah, everybody that went short that day in that candle because they saw the market selling off didn't get out of their positions. Their stops were either here or here. The market opened up and took the lot. So the structure break, in fact, you wouldn't have got a structure break until you got down there. So there wouldn't have been one on that day, but it doesn't matter. Anyway, I'm not going to go into the details of market structure. It's all in the course. I got honest street advices today in this live stream. More than 11,000 course, including ICT's 2017 mentorship. Good man. Again, I have nothing against ICT. He's just never ever traded live. And he was taught smart money concepts by somebody else. You know, and this is the whole thing, you know, like I've said this before and I'll say it again, nothing against ICT at all. What is this? Marks out of 10 for someone that can tell me what that is. What's the name of it? I don't know how many people I've got in here. Am I talking to one person or 10? I have no idea. But anyway, imbalance, fair value gap. Thank you, cash flow. No, it's not. It's a wide range bar. Yeah. That's what he calls this, right? What's the name of this indicator? WRB hidden gap, wide range bar. And again, we've done this before, but I'll show you the website. This is the bloke that invented the wide range bar. Do you think he was trading before ICT or after ICT? When do you think this website was created? Again, Google, I don't know how old Google is, but this was 2002. I'm pretty sure Google wasn't around then, was it? It might have been. I don't know. Probably about when Google started. The guy that invented the imbalance or fair value gap, as ICT calls it, is this bloke. He came up with the concept of the wide range bar, WRB analysis, way before ICT ever entered the market. YouTube wasn't there. Nobody knew about him until YouTube turned up. YouTube wasn't in existence when the bloke invented this thing. There's your wide range bar right there. There's your wide range bar right there. There's your wide range bar. Call it what you like. It's a propulsion candle that is bigger than the preceding three. Yeah. And this is why I say everything you learn in a course is recycled something else. The best marketers are the ones that sell the most courses. That's the way the industry works. The next time you've got a course that you want to do, email the guy that did the course and say, can you pop on YouTube and just do some live sessions and demonstrate how it works for me for a week? See what response you get. He'll send you a video of loads of examples of the trades being played out. Maybe, if you're lucky. You probably won't even do that because he doesn't care. Because he's got a marketing budget. He spends £1,000 a month to make £3,000 worth of course sales. As long as he's spending X and making Y, he's making money. That's all he's worried about. He doesn't give a monkeys if the course works or not. Why would he? Because he doesn't do it. They throw a tantrum and tell you how bad you are if you ask him to go live. Yeah, quite often. ICT, I mean, I have nothing against ICT, but there's proof on YouTube. He's phoned people up and threatened to kill them on the phone calls. I can't remember who it is. There's a bloke. I used to follow him. I don't know if I've still got his videos. I've got loads of people I follow which are all traders. I follow Trader Tom and lots of people. Stat Oasis does lots of things. But there was a guy, Raja, there you go. I never watch it. I just follow him. Was it him? Hunter. This is the guy. I've no idea who this bloke is. And again, right, the downfall of ICT. Watch this video, and there's a part 2 to it. I don't know how true this is. I have no idea. I can't tell you. But this, these videos, there's another guy who basically ICT was laying into him, ripping into him on the phone and stuff. Because he's got lawsuits going against lots of people about all sorts of stuff because they copied his teachings, which is fair enough. But all of his teachings were taken from somebody else that taught him how to do it. So in effect, should they not be suing him? At the end of the day, it's all recycled stuff. There's no trademarks on anything in trading. The term candlestick pattern, or a propulsion candle that is bigger than this, and this, is a WRB. That's the term that was initially coined by the bloke that found out the concept and then invented it. And all it is an area where people sell hard and add to the orders. So the reason this wick is here is because they sold hard, broke out, and now the buyers tried to get back in and the sellers went, nope, we're short, and they pushed it back down again. Yeah, it's a bar with a wide range. He hasn't got a copyright on this. It's a propulsion candle. And the fact that this is down and a big candlestick, you could probably say, right, we should be going back to the Chinese or the Japanese or whoever it was invented the candlesticks. And they should be suing everybody that's ever traded because we're all copying what they did way back in the X century. It's all recycled stuff, isn't it? Everything's recycled. Just told in a different way. It's the same story in a million different ways. But I don't have a problem with anybody that teaches, as long as the information is good, it's delivered well, and it's logical, and if it helps you, it's brilliant. ICT. I've done some of his course. I've watched a lot of his videos in the early days, and I got a lot out of it. But it didn't help me. Some bits helped me, some bits didn't. The concept of market structure probably came from him, but I really got it from Steve Malrow. Again, I've done so many courses. It's all merged into one. Everything's a blur when you've looked at it for such a long time. They throw a tantrum here. Vinny E Mini, is that the guy that he had a go at? Order flow. Vinny needs a life, to be honest. He's obsessed with ICT. His obsession with ICT is unhealthy. People like to hear you give it a fancy name. Yeah, you've got to give. I mean, it's good. I don't have a problem with. I coined the phrase market reversal alerts because this is what it does. It alerts you to a market reversal. It's not a flashy name. It's just a description of what's happening. I could have called it the orange box of doom. I don't know. It doesn't matter, does it? This is the ADR reversal indicator. Why? Because it plots ADR on the chart, and when it gets there, it often reverses. I haven't come up with anything fancy. The bloke invented this, called it a wide range bar. Why? Because it's a wide ranged bar. Everything, but it doesn't sell, does it? It's not marketable. It does what it says on the tin. A lot of the stuff is, it's all done for marketing and smart charts. Greg Secker's software that he sells called Smart Charts. There's nothing smart about them. They're candlestick charts. It's not smart. It's what everybody else uses. It's just looks snazzy, and it's got a load of indicators built in which are not proprietary. Does that make them smart? No. The thing that makes you smart as a trader is you. If the market is flying up like that and you're hitting the sell button over and over again, you're not a smart trader. That's not a smart money concept. Smart money concept would be to hit the buy button that day. But you don't know when the buy button is going to stop working. You need to hit the sell button. There's nothing smart about it. The fact that the market moves and takes out the previous day's low isn't smart. It's just an observation that we can look back in history and say it happens on a regular basis. There's nothing smart about it. It's just a chart observation, isn't it? Call it what you like. You could call this the long wick concept. Imagine if whoever coined the phrase smart money concept had called them the long wick concepts. We'd all be talking, are you a long wick concept trader? Do you trade LWCs? Is it LWC? Long wick concept. Yeah. Yeah, so I'm an LWC trader. Oh, excellent. LWC is brilliant. Do you trade SMC, smart money concepts? Yeah, it's awesome, isn't it? Next big thing. It's also got 50-50 shot being right and wrong, and it's going to go sideways. Oh, it's a good rant this morning, isn't it? I do like having. I'm not ranting. I'm just, it's a tell it like it is session. We like these tell it like it is sessions. You are a very bad salesman, which makes you a good trader. I used to be a salesman, funnily enough. I used to sell yellow pages. I used to work for the yellow pages and sell advertising. I got fed up working for the man, so I decided to work for myself. And that's where I started. My obsession with trading started. My obsession actually started when my eldest son was born, because I was like, holy crap, I better get a proper job. And this bloke called, I can't remember his name. I'm going to have to look him up. Day Trading Radio. This is the first guy I ever started trading with. And he's brilliant, Johnny. Look at his website. Again, this guy's not amazing at marketing, is he? This website isn't the best in the world, is it? It's a mess, but it's a hot mess of stuff that works. This guy's brilliant. He's a stock trader, and this is where I started trading. School of Rock, School of Stock. He's into rock, obviously. But I didn't follow a course. There's no course here. He basically trades live. That's it. He trades live. And that's why I started with him, because this guy was doing it day in, day out. And I could see him making money. So he knows what he's doing. And the other stock trader I've got massive respect for is Kunal Desai, Bulls on Wall Street. Again, live trader, Kunal. Kunal drives a Porsche as well, very similar to mine. So I like Kunal. But Kunal's awesome. There he is. He teaches his course live. You have to pay for his course. He's selling a course, but he also trades live every day, and he makes decent money every day. Brilliant. So, that is why I started with these guys, and this is why I do what I do, because the first mentors I ever had were people that traded live in front of me and showed me they were doing it. All the courses I took where nobody ever traded taught me exactly what these guys taught me in their courses. It's the same stuff. It's the same stuff. Bulls on Wall Street. The vast majority of their course is trading this pattern called a flag breakout. It's trading an ORB, opening range breakout. It's trading a gap fill. What do I do every day on indices? I trade trend continuation, flag breaks, I trade opening range breakouts, and I trade gap fills. This is what I learned day one 14 years ago, and it works today, because this guy in his live trading sessions showed me him doing it every day. So I just carried on doing it. And this is where I started scalping. Brilliant course. That's not cheap. And it's not fast either. Like it says here, 60 days. Yeah, it's not a short course. And you've got to trade stocks. If you want to be a stock trader, there's a lot of work involved in it. It's a lot harder. What's he selling it for? I don't know. Oh my God, this is a squeeze page and a half, isn't it? How much does it cost? No, you got to fill out form. I mean, like everything, you'll be parting with somewhere between 1.5, 3 grand. But if you want to learn to trade stocks, this guy's great. He uses TC2000. But yeah. Oh my God, this isn't moving, is it? Anyway, that's me, my background. ICT makes you feel like you've discovered insider information. Interbank price delivery algorithm. Yeah, what's that? Do you know what it's called? Well, actually, the interbank price delivery algorithm doesn't exist in Forex because there's no centralized exchange. There is OTC trading, which stands for over-the-counter trading in between banks. The only interbank price delivery algorithm is called the CME, Chicago Mercantile Exchange, which is a centralized futures network. He doesn't trade futures, as far as I know. I don't even know what the interbank price delivery algorithm is. Well, put it this way. I know 3 guys that worked in banks. One of them on Barclays market maker desk, one of them Barclays prop desk. I've never asked them, but I will. And I'm pretty sure they would have never heard of the interbank price delivery algorithm. I'd imagine the guys that work for the largest bank in the world would probably be aware of it, but I will put that on my list to do. I'll email Steve and ask him. Already started picking my Lamborghini when I heard that. Yeah. 40 years of trading. He looks 30. I don't know what he looks like. Never seen him. You've never seen me though, have you? That's not a problem. I'm nearly 50. I don't want to go on screen. I don't want you to see me. Not for any reason that other than I'm not photogenic. This is why I think people like Roger Banks and that do really well on their channels, and Trades by Matt, I guess, because they've got a face for camera. I've got a face for radio. I just don't want to. I don't know. I'm shy. I'm not shy. I just don't really want to do it. There's no point. You don't need me. What you need to see is the charts. You don't need what I look like. It's got absolutely nothing to do with anything. And I haven't got a camera. If I wanted to, I couldn't show you. I haven't got one. I haven't got a camera. So I can't show you my face because I do not have a webcam. I've never needed one. I can show you a picture of me. I'll put a picture of me in Telegram. I'll find a picture of me and I'll put it in Telegram. There you go. If you want to know, that's my reveal. But you don't need to see me. What's the point in having my little face up here? It just covers up chart. You know, it's like, there you go, look. Right? You can't see any of that corner of the screen, so you can only see this bit now. Doesn't help, does it? Having a little man on the screen. I don't think. I don't know. It might help my YouTube viewing ratings. I don't know. I've never tested it, but I don't really care. Like I said, I couldn't give a monkeys how many YouTube subscribers I've got, how many people come in the stream. It's not what I do it for. Right, this DAX is doing my head in, so I'm probably going to call it a day. It's just like pulling teeth. I've made money on my funded account. This is just not going anywhere at the minute. We're waiting for 12 o'clock. We've got literally half an hour until the pound rates, so we will see where it goes from there. Underground Traders Alliance. This guy claims to know how the market maker delivers price. Yeah, he delivers price via iceberg orders. in the futures market. It's not a secret, it's a fact. It's just, again, just before I go, if you knew how the market maker delivers price, yeah, would it affect the chances of when you hit the button, price moving more or less in your direction? Right? I could tell you the market maker was delivering large orders here because it did that. You don't know it's starting until it's started. Smart money concept traders would have told you that's exactly where you need to get in because there was a stop hunt and liquidity run. That's news. No two ways about it. That's FOMC, right? We see this price action happening all the time. If somebody knows how somebody does something, that's fine. It doesn't give you a competitive edge. An iceberg order, as I've explained earlier, is where they break up a large order into smaller parts. Yeah. And it's called hitting the bid, hitting the ask, right? So you see price bouncing. You can identify that in a chart. I've just explained that's how they go. That is exactly how the market maker delivered price. You have price discovery, where the buyers want to see if there's sellers at that area, and you have sellers that do not want to let price go above there. There will be an iceberg order that is set to trigger at that level, which will be split into multiple parts where you will see price bouncing. Then it moves away. We call it support or resistance bounce. Yeah. The guy that's claimed in Underground Traders Alliance, which is again a lovely marketing name, to have found out some secret source, has discovered support and resistance. And he's suddenly discovered it and he's gone, wow, every time I sell resistance, it goes down. Sometimes it doesn't. Seriously, that's it. That's it. God, I'm doing everybody out of a trading industry, aren't I, today? I'm debunking every single theory out there. It's all the same stuff. It's all the same stuff. It moves up and down. That's the problem. He knows the theory, but no clear rules for entry, stop, or target. No, because you can't have a clear. You don't know where it's going to go. You don't know where it's going to go. How can you have a stop, a clear stop? How can you set a stop that you know isn't going to get hit? How can you set a target you know is going to get hit? Do you think everybody that went long on FOMC yesterday and had their stop under there and their target up at that high, they were convinced they were going to get that hit and that was never going to get touched? Otherwise, they wouldn't have put the orders in the market. Smart people saw that and shorted it. Call them what you want: smart money traders, smart money concept traders, support and resistance traders, price action traders. Wicks don't lie. I think that's Roger Banks' thing, isn't it? Wicks don't lie. See long wicks to the upside. What's that tell you? Buyers have run out of steam. It's not rocket science, is it? What happened after the buyers ran out of steam? The sellers took over. Why? Because everybody that bought there had to exit their positions and sell. Market structure started to play out. We had a break of structure. We retested and broke to the downside. It's all the same stuff. I've explained every single concept in trading in the last hour and a half. You don't need to do any more courses. That's it. It's everything. You just don't know when to hit the button. Neither do I. Sometimes you'll hit it and it works. Sometimes you won't. Simple as that. Cut and dry, black and white. Yes, there's ways to enhance the chances. Yeah. When you see this happening, 4 wicks like that, you have to be a bit silly to hit the buy button, don't you? So yes, there's things that you shouldn't do, but what you should do is very, very difficult to tell. But you can see you shouldn't be buying when the market has rejected it for 20 minutes. We pushed up into an area of previous resistance and the market rejected that level for 20 minutes. Your brain should be saying, this ain't happening. And as soon as you saw that bearish engulfing, you should have been short. This is all great hindsight, isn't it? Did I execute that trade? No, I wasn't actually here, so I couldn't. But that's the trade, wasn't it? The trade I took short on the pound US dollar yesterday was underneath the low, and I was expecting the US dollar to power up, and it did. I left that trade there. I didn't have a stop on it, but I had a TP on it. Did I make money? Yes. There you go. It's easy. Aussie dollar yen's just hit ADR. Sorry, Aussie dollar yen. Sorry, pound yen just hit weekly. I saw a pound yen. So pound yen just hit weekly range, 560. So very extended now on the pound, but obviously we've got 25 minutes until the rate announcement. So could go up, could go down. Don't know. I wish I did. You should do an interview with Trading Nuts. He has too many fakes on there. I would have loved to hear someone genuine. Well, yeah, Trading Nuts not interested in me, is he? Because I'm not going to pay him anything to get exposure because I'm not selling a course, or I think I might sell more indicators out of it, but you know, at the end of the day, it's not. I don't have a big enough following. I'm tiny. I'm just a trader. I want to see red folder news 10 minutes before the actual release. Insiders apparently get the figures early. Yeah, there is that. I mean, obviously, with any news release, you have to obviously factor in the Bank of England. So a lot of people know what this is going to be. Of course, they do. Bailey knows 100%. Bailey knows what this is coming out as. If you're a mate of Bailey with a £1 million account to trade, gives 20 grand, and I'll let you know what we're doing. But does that, you've no idea what the institutions that are driving the market are necessarily going to do with that information. So insider information isn't necessarily that useful, I don't think. Don't forget, you've got 10 banks that run this market. There's 10 institutions, banks, funds, with a big enough bankroll to make this thing move up and down. And I'm talking thousands of contracts to make a 5-minute candle do that. There's 10 of them. Do you think they're all in line at the same time to do the same thing? Of course they're not. If Barclays are short and the price has dropped down, HSBC want to go long, they will stop Barclays, and then Barclays will sell their positions to HSBC, which will drive it higher. HSBC and Barclays are in competition with each other. This is why price moves, buyers and sellers. So if you have insider information as to what the rate is going to be, that doesn't tell you what Barclays and HSBC are going to be doing when that news comes out. How are their books balanced? Where do they need it to go? How many orders have they got to execute on the pound today compared to that? How many millions of customer funds do they need to transact for their hedge accounts today in that direction? HSBC have got more, it's going to go up. If Barclays have got more, it's going to go down. We don't know. No one knows. But, you know, Trading Nut interviewed a kid claiming to get a 250 to 1 risk reward with his wick-off method. Again, wick-off is just range breaks. It's a breakout strategy based on range. I reckon he'll have anyone on. Yeah, he might do. I don't know. But I'm not. What am I going to go on and tell? I'm going to go on and tell people how I trade. I'm not going to explain everything like I've explained this morning. This is a rant. Not a rant. It's not a rant at all. I'm not having a go at anybody or doing anything. I'm just explaining the way that I see the market and the way I see education in this sector. It's just a big recycle bin of the same information, because people know that people are desperate for money and they will sell them anything to make money. But I just can't understand why it's so expensive. My bootcamp took me a week to record. Is it worth $2,000? No. It's not worth $2,000. I could probably sell it for $2,000 to some people, but it's not, is it? It's something I took a week to record videos for. I don't think any course is worth $2,000. Unfortunately, everybody charges. There's one course I want to do at the moment by StatoAces. He's just released his new ATM course, which is automated trading systems. Ali Casey. I've got a lot of respect for Ali Casey. He's a very intelligent guy. I want to do his course, and he's just released some spaces on his course because I'm always interested in doing new courses and finding new edges. He wants $3,000 for it. And I can afford it, but I can't part with $3,000 because I'm going to get, out of the 100% of information in there, I'm going to take 5% of that away. I can't pay $3,000 for that 5%. I know too much. If I know nothing, I can understand it, but I just can't pay. I can't part with $3,000. I'm sure it's a really good course. And I want to basically build a portfolio, and I want to learn more about strategy, quantum development, and that side of things. And he's got a lot of statistical information I want to get my hands on, which I could probably do myself, but I can't be bothered. But I can't pay $3,000 for it. If he was charging $1,000 for it, I'd buy it because I'm stupid like that. But I wouldn't. I can't pay $3,000 on it. It's too much. Is the Bank of England rate postponed? Not as far as I'm aware. It's coming out in 20 minutes. I haven't seen it. No, it's not postponed as far as I'm aware. You can give hopeful newbies the truth. Most of this crap doesn't work. We need to come in with a process, not a strategy. Yeah, but people don't listen. Cash flow. People do not listen. Do you think I listened? I've spent thousands on courses. Do you think I listened? I spent 5 years blowing accounts. I didn't listen. The Holy Grail was out there. I knew it. I knew the Holy Grail was out there. There's an indicator out there that is right 70% of the time with a 2-to-1 risk reward. It's out there. I know it is. I just can't find it. I'm like Indiana Jones. That Holy Grail is out there. I can't find it. And what does it turn out to be? A wooden cup. Oh, God, drinking water all this time was the Holy Grail. I spent 14 years looking for it, and it was just a bloody wooden cup. Literally. People won't listen. If I can tell people I'm blue in the face, all you need to do is press the button and hope it goes up and down, and just don't put a stop there to make sure that you don't lose the money. But they won't listen because that's not what the 99% of people are telling you. But then again, what's the statistic of people that lose? 95 to 98%. But again, tell people that. They still won't believe me because they know better. Everybody knows better. I'm going to close this out. Oh my God, my S&P. I left that trade running. Oh no, I took that trade on the 1 minute chart, look. Right, so I had a 50-50 shot when I took the trade. Winner, winner, chicken dinner. I made money. Look at that. How good am I? I haven't got a clue which way that was going. I just hit the button. It worked. Next time it won't. Have I proved my point yet? DAX. There we go. We're likely to get massive volatility in the DAX. So what I'm going to do is I'm just going to break even average this position. So I can't lose. I'm going to see if I can get a run on it because obviously when the pound rate comes out, everything's going to go nuts. Rate announcements affect everything usually. So I expect the indices to have a little bit of a wobble. If they wobble in my direction, fantastic. In fact, I am going to just move my TPs there. So I'm just looking to come and do a smart money concept run down here. So this is support. So I'm going to test that. It might well just slam through and go absolutely miles. I don't care. If it does, it does. It's fine. But that I'll be happy with this morning. I haven't got that running on my live account because I've already taken the profit on it. But I'm going to break even on it. So if we fly that way, I'll just get out and that's it. I didn't listen and wasted years. I don't want others to do the same. Yeah, exactly. That's why I did the bootcamp. That's why the bootcamp's out there. The first video in that bootcamp, I say at the very start of that video, listen to me for the next 5 or 10 minutes. I'm going to tell you exactly why you should be listening to me, because I'm spewing out 14 years worth of education and I'm compacting it down into 5 days. This is all the crap that works. All the crap that doesn't work, I've thrown it away. Bang. Either listen to me and I'm going to lay out exactly what we're going to do, or go elsewhere. Don't waste your time. Don't waste your time doing a 5-day course. This is what I'm doing. If you don't like it, off you go. That's exactly what everybody needs to do. If every course was like that, if every course at the beginning said, what my strategy is this, doing that, and that, and that, and if you think that sounds good, I will go into it in detail so that you can trade it. If you like it, give me $2,000. If you don't like the sound of it, don't. If everybody did that with their courses, we'd never buy anything, because you'd read up front that everything is exactly the same, wouldn't you? You could clearly define your edge if asked. I couldn't clearly define my edge. No. I can't clearly define my edge. My edge is partly discretionary. My edge is partly mechanical. My edge is 14 years watching this stuff going up and down and coming to the realization that I haven't got a clue. That's my edge. But I have got an edge in position trading. This is a back-tested edge. But again, I haven't got an edge that works all the time. Yeah, look at where I am now with Aussie New Zealand. Is my edge working? No, it's not. I'm going to need to deal with this. I'm pretty sure my edge will play out. It's starting to play out now. We've got a reverse alert on the hourly. We've retested. If we can break that high today, we're going to get a run to yesterday's high. If we can get an ADR hit today and sit somewhere around there, I'm pretty sure we'll get that move started. I don't know though. Obviously, I have no idea. But you know, edges fail. All edges fail. This is when you lose money. And again, brings us right back to the beginning of this conversation, why prop firms make so much money. Because if you had an edge that worked all the time, you wouldn't need a prop firm, would you? You go and ask your bank for 50 grand, you turn it into 5 million and then give them their 50 grand back. If edges worked all the time, you'd be fine. The thing that makes an edge work is you. Identifying when your edge is broke and doing something about it. Using what tools you have at your disposal. When your edge fails, you don't know what tools you've got at your disposal. So how can you possibly program a system to deal with that situation? You can't. You've got to do it manually. You've got to be a trader. Which brings us back to the Holy Grail. EA doesn't exist. It's all full cycle, everything. You literally just have to accept the fact you've got to spend hours in front of charts and find your edge. And the only way you'll find an edge is by doing loads of courses. But the clearest edge is this is a random market. And there is a 50-50 shot of this thing going up or down in 10 minutes time. And on that note, I've got to disappear because I have actually got to do something before that happens. So there's an institutional trader interview where he reckons the daily chart and swing trading is an even playing field for retailers. Intraday is worthless. Yes, 100% agree. Yes. Just before I go, every strategy I've developed in Strategy Quant, which is a software development platform for strategy development, every strategy I've come up with that has a mechanical long-term edge is on the daily time frame. Drop it down to H4, it fails. Drop it down to H1, it fails. Because you're trading randomness, you're trading chop. Yeah. Every trade you take within here goes wrong. If you'd have just sold the low of yesterday, you'd be well in now, wouldn't you? A million times dead. One trade, stop, never touched. But smash days, I just told you, smash days. This EA works perfectly. Smash bars. Go and look him up. Larry Williams. It's from a book called Long-Term Secrets to Short-Term Trading. Do you know what the long-term secret to short-term trading is? That's what his book is about. The long-term secret to short-term trading is don't do it. Shocker. He sold a book called The Long-Term Secrets to Short-Term Trading. The name of the book suggests he's cracked intraday trading. The book reveals you can't do it. Daily time frame is the only way you'll ever make money. It's been around for years. Larry Williams wrote that book 30 years ago. Nothing's changed. Nothing's changed. Smash days, his concept, works beautifully. Only on daily charts. And you'll probably maybe get 1 or 2 trades a month. And it only works on a couple of handful of instruments. So could you make a living taking 5 trades a month? If the answer is yes, brilliant. You must have a 100K account. If the answer is no, it's because you've got a 5K account and you can't make enough money out of 5 trades. So what does everybody do? Go intraday, because you can take 100 trades a day. Does it work? No. 100% right. I totally agree with that institutional trader. But then now you're sitting there watching me who've made 3.5 grand on a prop account in 24 hours. I will lose it. I will blow that account. Within the next 6 weeks, that account will be blown. But I am not making money long-term intraday. What I'm doing is I'm playing the prop firms. I'm giving them 5 grand and I'm taking 20 out of them by making sure I build an account up to a level where I stop trading and extract that money before I blow it, before my edge disappears. Because my edge will never not disappear intraday because I can't trade randomness forever. Where's this going? I have no idea. Hopefully it goes down. If it goes up, I'm going to lose. I'm not going to lose. I'm going to break even. If it goes down, I'm going to win. Intraday. If I'd have underneath the daily candles, yeah, on the DAX, if I'd have had a short, this is a smash day. This is a smash day candle. The entry was short. Look at that. That's a smash day. Bang. With a smash day strategy, you put a pending order underneath there. Inside bars, perfect, right? Oh God, got to go. But anyway, I'll just explain this. Inside bar breakouts, one of Larry Williams' strategies. There you go, inside bar breakout. What do? 10 minutes before the end, you place a pending order at the high and a pending order at the low. What's the concept I said about earlier? There's 3 things that can happen. A candle happens. You have an inside bar, you have an outside bar. You have a bar up or you have a bar down. 3 things can happen, right? On an inside bar, only 3 things can happen. It can be another inside bar. It can be an outside bar. It can be an up day or it can be a down day. The odds of an up day or a down day are much more than an inside or an outside bar. Therefore, if you place a pending order there or there, a mechanical edge says you will make more money more often. Tick, still works today. Doesn't work very well in bear volatile markets, works very well in bull trending markets. But that's it. But you won't find many smash days. Yeah, you won't find many. So you'll be sitting here not trading for a week. Can you imagine sitting here? What's your job? I'm a trader. When did you last trade? 2.5 weeks ago. Why? Because there weren't any smash days. Can't do that, can you? Everybody's got to go intraday because there's not enough setups on the daily. You only get 1 setup a day. You might have to wait a week for an inside bar. Look how many inside bars we got. That's it. On that chart, going back to the 4th of October, that's the only inside bar. So you're playing inside bar breakouts, that's your only trade. Yes, it worked, 100% strike rate, but you only got one in a month. They work brilliantly. Daily breakout strategies, any daily strategy works because the market is stealing money intraday and then going, right. And again, day 1 of Bootcamp. Accumulation. Asian session passes over to London. London says, should we go long or short? We got a long book at the moment. Okay, brilliant. We'll go long. Asian session, we know to go short. Anyway, I'll leave it there. I'll be in the Telegram group if you need me. News is out in 5 minutes. I've quickly got to go and do something before the news comes out. So news is out in 5 minutes. I'll be back tomorrow morning, 7:50, same time. This is a long one, probably one worth pinning, I reckon. But yeah, I'll be back tomorrow morning in the Telegram group if you need me. Other than that, have a good day. And I will let you know if I trade anything, but I say I can't find many setups at the moment. And yeah, be back tomorrow. We'll have a look at the fallout of the pound. Have a good one. See you tomorrow.